Welcome, ladies, gentlemen. We're live. Oh my goodness, we're hopping on here real quick just to take a look at the red. Take a look at this red. Oh my goodness. We're gonna scroll through this and see if you guys can take a look. I don't see too many greens right now, and I wanted to take a quick peek and take a quick talk about Apple. But what we're gonna get into is talking about why the stock market is getting so into the red, guys. Now you're gonna have to bear with me here. I figured I'd just hop on for fun. I'm gonna wear the glasses because I'm getting over a bit of a cold. Not a big fan of getting sick here, but it's life, right? So I've been trying to take it easy, and I still wanted to make a video today. So yeah, let's see if we can talk about a few stocks. But more importantly, guys, in this sea of red, in this down day when everyone's taking profits, we got hedge fund managers, you got funds, all kinds of stuff going on out there taking profits right now to show those year ends on their book for their clients. So we're seeing nothing but red. Actually, the MJ sector is getting hit pretty hard here. Like I said, I'm coming back to life. You guys need to help pick up my energy here because I'm dying, getting over this cold. So I need to know what you guys think about what's your worst performing stock today in this crazy day here, where we can finally pick up some shares in some companies, perhaps. I'm hoping so, anyways, going into the new year. But taking a look at my worst one on my list right now, we're talking Tesla, obviously being the most volatile, but it's only down about 4%. And actually, maybe we'll top onto my actual trading account right now, and I want to show you guys exactly what's going on here. Let's see if we can get into this real quick. Um, how are you guys' portfolios doing today? I'd love to get some of you on here as well. Maybe we should share the live link. Give me a sec here, ladies and gents. If you guys want to join the conversation here, help bring me up a little bit. Coming into the new year here, I wish it was a little bit more lively. And now I messed up my password. Give me one sec. Give me one sec. I got to show you guys this. So I was really lucky today, actually, considering the Canadian dollar is up so much. What is going on here? All right, one more sec here, guys. I want to show you what the dollar's been doing as well, because I was shocked to see that the Canadian dollar actually hit, I think, 77 cents today, which was like the highest it's seen in a little while. But I was shocked for all my U.S. holdings to not be as down as much as they were. So in just my main accounts right here, we're taking a look at about 128, which is surprisingly only down about $1,000, and which really shocked me because when I saw the amount of red that was going on today, and then I figured, you know what, it's probably because of Apple. But I was trying to figure out what was doing in here that was moving all of this into the green, because like I said, I saw some major red this morning. I think my accounts hit about 127, give or take, and then like I looked at it in the afternoon after I started having a nap because I'm getting over this cold, and I was kind of shocked to see it was up this much. But I still think we're going to see, going into the end of the year here, guys, some profit taking from a lot of these hedge funds. I think we're going to see one more day of red before we get into the January blahs, unless we're holding Apple, of course. But I think you should make this a regular thing where you stream at a certain time or at least a certain day of the week. That way people will know when to tune in. I absolutely agree with that. I'm trying to set up a schedule for next year where I'm probably going to post a little less often so I can focus on doing some other stuff as well, but it'll be trying scheduled where it'll be like maybe like a Monday, Wednesday, and Friday, and then do a live stream probably on the weekends or something like that, or try and hit it on a Friday evening. I just find there's more people to tune into, usually at nights. Every time I hop in at night, we usually get a few people to pop on here. But nonetheless, luckily, as I sit here, we got another sale on our Shopify store. That's not so bad. That's passive income for you right there. Can I get that to zoom in? That's not so bad. So the store's doing pretty well nonetheless as I continue to try and endeavor down my Shopify experiment. This is not my first Shopify store, by the way. I have actually experimented with many of Shopify stores, and now we're finally getting into the ones that are starting to produce profit. But now I actually are making some good moves with that, I think. Just trying to build up the YouTube channel as well here. I think it kind of complements it very well. But going down the road, I think I'm going to start taking some time to focus on building a few more online stores. I own a few other domains as well. I know we're drifting off from the stock market topic here because honestly, I really wanted to take a look at some of my individual positions here and just show you guys what's up while I try and continue to stay awake and just give myself some life here and kind of join you guys. So if you have any questions, never hesitate and consider joining as well, because I'd love to have a conversation with you this evening. But taking a look at Apple right now, not too bad, other than I kind of gave away some of that goose that is laying those golden eggs right there, because I used to have about $20,000 sitting in this position. And now that is my entire US position in Apple. But if I held on to that and I didn't sell it earlier this year, it would probably be up substantially, probably another $5,000 more. But unfortunately, I was not. I wanted to leverage down, increase the dividends. So luckily, I'm still happy with the positions that I purchased because that was what I used to buy some of my MO, some of my BTI, which I'm not doing too bad with either. If we take a look at those, MO is actually considering it was down quite a little bit today. In this account, it's not doing too bad overall. Not a bad position there. I'm kind of given up on MO at this point. I'm really happy with how I filled that out into the end of the year. That was my core focus, which I've been talking about way too much. There's the BTI position in the one account. I also took some profits off BTI to transfer into the RRSP account, which actually was down quite a bit because of Tesla there, but we're still seeing quite a healthy amount of green nonetheless. Not so bad. Now, I maybe will talk about really quickly because this conversation comes up a lot when I talk to people about their RRSPs or their registered retirement savings plan, because that is what, right, that's just my US positions in that account. Maybe I'll show you the Canadian positions as well, which is just the VFE. And the reason there's so much controversy around that RRSP account is because people kind of get confused about how you can deduct from it before retirement, because that is what I'm actually going to be doing. And a lot of people are always hesitant on how exactly you go about doing that because you can't do it overnight. There's penalties. It's a little different from the States with the 401k, because here what ends up happening is when you withdraw, if you withdraw a minimum of 5,000, because that's like the minimum amount before you start getting real big penalties at at $5,000, you end up getting penalized 10%. Anything over that ends up becoming to 15%, and then I can think they take as high as 20 or 30%. It's a little bit ridiculous. So what you end up having to do is you don't want to load too much capital into an RSP, but enough that if you can generate some profits and you don't have a high income, because as soon as you pull that money out, it's just as if you took money out of any other account or you took profits off stock. It just gets taxed towards your regular income. So let's say you have a year where you're not making as much money and you still want to use that capital to invest, but you want to actually make, invest it somewhere where you can actually use the capital after it's invested. Just take profits out of your RSP, but no more than 5,000 a year. So over the next 3 to 5 years, I'm just going to build it up with some safe investments. Hopefully Tesla will grow. And then I'm going to slowly, over probably about 5 to 10 years, start pulling out little bits at a time. But if there's a year I make a lot of money, I'm not going to touch it and I'll just leave it. But it's a great account, because where people get confused is by the fact that it defers the capital as of today. So you got to remember that money that I put in there is about $20,000, which if I were to have to pay tax on, which gets deducted from the overall amount of my income this year, you're going to see that you're going to be saving it's a stupid amount of money. It ends up being like 4 or 5,000 out of the amount if you're taking like 25 or 30%. So I mean, that five, again, off the other amount as well, it gets a lot lower of your income. So it's not only are you saving the money on that 20 grand, now you're saving on the income that you're claiming as well. So I mean, it really deducts everything, and then you end up saving somewhere between 5 and 8,000 is what I'm going to be looking at, which again is the equivalent of that Tesla position, right? So you have to imagine I own this Tesla position as if though the government was just going to take that money. So I mean, if it doubles or triples or whatever it does, and I start taking money out of it to start buying something outside of it, and it's just profits, who cares? Pay the 10% on the $5,000. I mean, most of us are paying a withholding tax of 15%, right? So I mean, it's not like it's that big of a deal overall, in my personal opinion, if you do it correctly, because you're going to see that 10% plus if your income is say 20 or 30%. So I mean, you're still going to be using a little bit, but let's just presume it's like regular income as it is. So that's my plan with that. Anyways, we got a question here as well. Or Happy New Year's from Dante Bruce. What's going on, man? Appreciate the information on the stream. Yeah, I got a bunch of Canadian guys out here, and I'm always trying to share the knowledge behind these accounts as I continue to learn them myself. But presuming you have enough capital built up, because I don't think you should ever touch an RRSP account until you fill out your tax-free savings account, because I mean, just pay the tax, get the money in the TFSA, and just load it up, because that sucker is a dream and a half, my friends. It's kind of crazy to think I'm only 27 years old, and I've kind of created this little thing here that generates forever about $450 a month, completely tax-free. And I have access to it whenever I want, because the difference between our accounts over in Canada in the US is you guys got way, way better trading platforms. You get the commission-free platforms. We don't really get that advantage. But at the same time, we get that TFSA where we don't get penalties or anything once the money's paid and in there. We can pull dividends out. You can pull whatever you want out tax-free. which is absolutely wonderful. So I'm going to try and focus on continuing to sustain that into 2020, as I can only contribute 6,000 a year to it at this point. But I think everyone should start hammering that as early as possible. Because I mean, but yeah, the Canadian positions, man. So the thing you got, what do we got going on here? Bank, a great Canadian investment for millennials. Bankruptcy. That's kind of funny. What's up, Super Mario? Not much. Not much. Super Mario is definitely mushrooming up here on these accounts right now. But I can't get over my Canadian positions, guys. It's almost heartbreaking to watch these Canadian stocks do nothing continually. I'm so glad I just kind of shuffled it all over, because the Canadian dollar might be up, which means I'm down on my U.S. positions and my dividends aren't going to be as high. But I'm not converting the capital, so it doesn't matter. I'm leaving the dividends in USDs because everyone wants them USDs. But in the meantime, it's a good time for me to be buying stocks, because when that dollar is up and the stock market is down, I'm getting discounts, considering I'm buying US companies here, guys. Not focusing on these Canadians. I got two good Canadian companies. We got RioCan, Northland Power pumping out those monthly dividends. Absolutely love those companies. They're going to be my bread and butter for my Canadian companies. I think I don't mind the banks, but there's just no growth, man. Just no growth going on. Those glasses are killing me. Yeah, I probably look extremely tired. I literally got a bad cold. I probably sound really raspy. Ended up sleeping most of the afternoon today. So I got up, trying to come back to life. Figured I'd hop on the live stream real quick and talk about the end of the year profit taking here, guys. Because usually, always, I was just waiting for it. I'm always just like, somewhere at some point here, if someone's gonna have to be booking profits in the end of the year, because people got clients. Not that Apple cares. Apple doesn't seem to care about nobody right now. Just dump the TSX. Yeah, man. It is a good debate, man, because a lot of people are into these Canadian banks, and I do, as a dividend investor, appreciate them, and I can understand the growth. But it's just the current climate that exists here in Canada with what is going on within the banks. I mean, you heard Steve Eisman shorting it. Banks are really building up like their loan loss provisions. So we're not going to see that crazy growth probably in the next couple of years. But at the same time, they're still managing to book a little bit more and have some room to grow the dividends, as they have been increasing them. But at the same time, they're just for the dividends. I always say I'm a dividend investor, but I have a hard time when I always want the combination of the capital growth and the dividend. Those are like those sweet spots, man. It's hard finding them sweet spots. I've captured a few this year, though. My worst was still GEO Group, but at the same time, BTI and MO definitely smashed it out of the water in comparison. Like I said, I own it between 4 different accounts, but these are just my main TFSA accounts. Still don't mind GEO. I am going to be picking up more of that into the end of the year. I still think it's a great company for dividends. See, this is the debate. It's just like when you're down on a company, it's for the dividends. But when you're up on the equity and the dividends, you're like, oh, man, that equity. It's like owning real estate at that point, especially when you can start booking, those 15 or 20% returns in a year is a little ridiculous, considering how liquid it is as well. A question: why do you own so much Altria? Because it's cheap. I don't know how else to state that, other than it's my personal opinion. I've done some decent homework on it, considering I've made way too many videos on it over the last year, and I just really like that sector of the market, because I feel like I understand. Considering I've really played around in the MJ sector in the early days, did well, and I always looked at the tobacco companies, but I always thought they were overvalued, so I kind of just stayed clear of them. Didn't really get them too much in the beginning, so I focused on the sectors I felt like I had a better grounding in. And then as soon as they dropped, and they kept dropping and kept dropping, and then I saw BTI was the first tobacco stock, by the way, that I bought, and I actually paid my first shares in it were 32 bucks a share. I literally caught the bottom of that one. It literally hit almost its base value of its underlying assets. Usually, it's almost impossible for stocks to drop below their baselining underlying assets, because that gets valued into the companies as well. I mean, it'd have to take a lot of beating for a company like that, with what it owns, to go much lower. That was just a lucky grab. MO I just picked up because I like the exposure to the other aspects of like the Western markets mostly, because BTI would be like your international, give you your European market. Now that the euro's coming back a little bit here, or the European Union's kind of figuring all that out, which is or there's highlights of it. I think it's just going into the end of the year. I think a lot of the presidential stuff they try and, well, I mean, I don't want to get too into that topic, considering, the whole impeachment with Trump, but I feel like they try and like cool everything off into the end of the year, make people feel real good, but always waiting for that backhand to come back with that one little snippet of news that just terrorizes the market again, which I would really like to happen, because I don't like buying stocks where they sit right now, considering Apple's PE went from somewhere around a 15. Like, guys, man, Apple. Like, does nobody pay attention to Apple right now? I watched a few. I noticed Hyperchange made a video on it today, but I'm absolutely flabbered by a company that large to be able to move the way it has, because we're talking about hundreds of billions of dollars, ladies and gentlemen. We're not talking about like change here. I always thought that these companies would move the slowest, just because of the fact of the amount of money. So for Apple to double from here, just to put this in perspective, it has to move $1.3 trillion. So we're going to end up with a $2.6 billion market cap. That is what it's going to take for it to double. Where does that kind of money come from? I mean, it's just, I try and do the multiples in my head, but at this scale, it gets so overwhelming just trying to grasp exactly what's going on, considering the fact that the revenues haven't exactly increased. But we're still talking stupid amounts of money here, though. Okay, like it's buying into that bank account right there. We're talking about a company that's bankrolling 50 billion a quarter, right? I mean, or not a quarter. What was that? Was that within that first year? The first year? No, they're banging out stupid amounts of money still, guys. Even if they're pulling in just a 55, these 260 billion within a year, though. Look at just the revenues, absolutely astronomical, mind-boggling amounts of money here, guys. It's still trying to figure out what you can do with that kind of capital, right? Because I mean, if you're buying into a bank account that big, you could pretty much buy Tesla out. You could buy Disney out. You got a lot of options, but they keep building it up. They're being fair to shareholders, doing an incredible amount. They took a stupid amount of shares off the market recently. So I mean, it's like Jim Cramer says it all the time, right? You want to own Tesla, you don't want to trade it. And I love watching those traders try and take Tesla here. I'm really sorry, guys. My throat is absolutely dying. So hope you're enjoying the video. I probably sound terrible. I'm still trying to get through it. So I hope you guys have some good questions and you feel like maybe you could join in, help my throat out here. Maybe I'll send over the live here if anybody wants to hop on in here. Just bear with me and I'm going to read some of your questions. Holding it together here, guys. So is the MJ good for long term? I'd still wait a little bit. Honestly, I don't have a problem overpaying for an MJ stock. I just want to overpay for the one that's going to win. And the problem right now is we don't know what that one is. Though we're starting to see some decent trajectory in a few of these companies. But it'll be neat to see how this ends up playing out, because I would still love exposure to it, even if it doesn't pay a dividend. It was one of the first stocks I ever got into in the first place. But the problem overall right now is just who's going to get the best funnels and who's going to be, driving the most cash flow at the end of the game. So for right now, we just want to see all of the 1,000 dispensaries that they're going to be introducing over the next few months here. There's a bunch opening up. So we're going to see how much that increases cash flows. And then on top of that, they've been lowering prices and they've been going to be bringing edibles out. The list goes on, which is good because the government's trying to compete with the black market, and they finally opened the floodgates. So we're going to see how this pans out. Will Canopy win? I don't know, guys, but have you ever wondered what happened to the CEO of Canopy? I think you should watch the video. Did I post that video on? I think I threw it in there at some point. Before I did my last live stream, you guys should really check out what he's doing. Let me show you this real quick. If you don't recall or you weren't floating around, there's a company, and I'm going to try and do this without getting any kind of bans on my AdSense here because I'm hustling, guys. I'm hustling. But taking a quick peek, oh, we got somebody hopping on with a test. Give me one sec here, buddy. I just want to I'll join you in, but I want to show you guys this company here because it's a fascinating company. But if we can get somebody else to hop on, join the conversation, we lost him. I was hoping someone's going to hop on. Come on, guys. If you feel like joining the conversation, never hesitate here. I'd love to get some conversations going. But taking a look here, guys, this is a company that claims they can take out the hallucinogenic effects of all these crazy drugs you hear about. And they actually allow you to quit alcoholism, tobacco, opioid addiction without any of the crazy withdrawals. And the guy that claims he came up with this was a guy that worked in Silicon Valley, and all his, addicted buddies on all these horrible drugs were using all these hallucinogenic drugs to get off the bad drugs. And somehow he found a formula, and you'll never believe who's on the board of this, considering Kevin O'Leary dumped a huge amount of money into it. Actually, I'll just show you the funny thing here. Just read that one statement. Boom. There you go. That statement says it all, doesn't it? But the head of the board here, if I could find it, you'll see it, not the head of the board, but part of the board. It's good old Bruce Linton, my buddy. And I love him a lot because he made me a lot of money with Canopy, and I absolutely understood what he was doing. and Constellation Brands didn't agree, and they fired him, which broke my heart. Absolutely broke my heart, ladies and gentlemen. So I sold Constellation Brands, which what is it up to today? I noticed it's become more of a swing trading stock than it has a growth stock. I feel bad for them as I really like their brands, but they really screwed up firing Bruce Linton there. But yeah, let's take a look. So if you take a look, I was really hoping that Constellation was going to turn it around, but they're going into the flat line after that investment. But I mean, you could say the same thing about MO, right? Like MO's down 200 and something million bucks, I think, on their investment right now in Kron. But I'm fine with that because I still do believe in it long term. But I like the exposure through MO because if everything works out, things are great. It doesn't work out, things are still okay, and I still got a lot of capital lying around. That's what we do when we were playing with them billion dollar companies, man. There's a lot less risk when you get exposure through somebody else. But let's take a look at some of your what else we got for comments here. I have a big prediction, so I'm debating if I should just continue to add to positions or keep diversifying. I was wondering what is going on with Aurora. Maybe we'll top open Aurora, but we'll start with the first question from John here. So I'll hop up on the screen real quick. John. So honestly, man, I don't care. Honestly, I like when the positions are down because I am planning on moving some money into my TFSA. I got to move some money around in the first place. So if stocks are cheaper, I can really enjoy it. And then on top of that, one of my wonderful investors on our chat group, which you guys should consider checking out, was really awesome because he saved me 10 free trades on my iTrade account because apparently he got hooked up and he's like, just call them. It's like, if you don't call them, they're not going to give it to you. So I gave him a quick call, but man, don't care about it. Just keep cost averaging in. If you feel you're over leveraged, it's whatever your risk tolerance is. So, I mean, if you feel over leveraged with what you got, leverage out. If you like what you got and you want to own more of it, I mean, go ahead and buy more of it. There's nothing wrong with owning Apple at these levels. You just got to remember if the market drops another, 15%, because that Apple can do it. It has. It doesn't take much for Apple to drop a decent little chunk. You have to be ready to cost average down. So I mean, just do what we do, man. Do the good old cost average passive income investment style, bro. You just got to slowly drag it in. So that way, when things like GEO Group in my stock, drop, I'm not overly concerned because I still got lots of room if I decide to grow it. And I'm never going to be done filling these positions, by the way. If you take a look at the portfolio, guys, the positions are a long way from being done. I'm just trying to get them to a level where I can continue buying other stocks because when this portfolio is built out over the next, I'm going to say 3 years, 3 or 4 years, probably by the end of it, I'm going to have somewhere between 20 and 25 positions built out between all of these accounts. And once those 25 positions are each worth between 5 and 10,000 a pop, I'm probably just going to start setting up a drip or just use the capital if I so please to invest elsewhere outside of the market. But my end game is to try and get my dividends, hopefully somewhere around that. I want to get it to the nice thousand. Somewhere between $1,200 is where I was thinking, just to bring in a decent chunk of change in a year. But I am also, like I said, guys, looking outside the stock market because the stock market's great and all, but there are greater ways of returns owning trading businesses. I love the online game right now. So it's always fun to try and see if you can find a way to make a 30, 50, or 100% return in a year. Because if you become a stock market investor, especially a half decent one, guys, and you're starting to see decent rates of return, the problem is doing anything else because then you start comparing it to your job. Then you start comparing it to everything else you do in life. And you're like, well, if I'm making, 16, 18% on 120,000 bucks, I mean, I'm bringing in more money than most of a lot of the work that I'm doing just in general. And it's kind of a weird psychological game that you end up starting to play with yourself. It gets a little annoying because you go out and you want to still keep hustling and doing things, but sometimes you get a little annoyed when the stock portfolio starts outtaking a lot of your regular income. So I mean, it's a nice freedom, but at the same time, I still think once you get used to that, you got to start pushing yourself harder on your own work income because you're like, I can do better. Like if I can't outperform my portfolio, what am I doing with my life? Like I should always be making more money than my portfolio. It's like a game against myself. It's kind of annoying and weird. I was wondering. So I was going to answer your question here. Why haven't you seen Corona? Why drink yet? Seem like all these companies are dragging their heels. Why haven't you seen a Corona? I know, right? Everyone's talking about the MJ sector here, guys. Sorry, I'm trying to be careful how I read that because again, I'm trying to avoid getting flagged here. YouTube does not like those conversations. But we're talking about Aurora, so I mean that MJ company, guys, is still considered one of the best ones out there. I'm telling you, those top tier companies are still dragging along. I'm surprised that Canopy's not winning though. On the front end with how much capital debt and things they have compared to companies like Aurora Cannabis, and there we go. That's going to flag us right there, isn't it? I'm slipping. You guys are catching me when I'm sick talking about something I enjoy talking about, but YouTube does not. I'm terrible. I'm terrible here. So, anyways, let's take a look at the stock here, nonetheless, and just see what we're down to because I know a lot of people that own it that are currently taking a bit of a sandbagging. And this comes back to the same point, guys. If you want to own companies like this, you should also consider cost averaging if you're not trading. Companies like this, you're going to be in it for the long game, my friends, which is why it's a shame they don't pay dividends. But luckily, I still think Aurora is going to do okay. But like I said, in my prediction game, guys, I'd rather wait, rather sit on the sidelines and just wait. Actually, I don't know why this is so funny to me, but have you guys ever checked out, just most people don't talk about the general index, the HMMJ. So if we take a quick peek at this right now, I just want to show you because it pays a dividend, and I want to show you how much of a dividend it pays and why it pays a dividend. So we can take out here, this is the index that represents all of those companies you love, all the baskets of companies most people are probably down on right now. And we can see the entire ETF here basically pays a 10% dividend. Well, how is it doing that? Because they wanted to mitigate their risk and they took short positions against it. So for as long as the stocks continue to drop, you're going to keep getting paid. It's a very good way. Most managers, if you meet a manager that's starting hedge fund, guys, or whatever they're doing for their investors, and you want to know they're half decent at least, because when you start managing other people's money, you want to mitigate risk, right? How do you mitigate risk? Well, you're going to obviously diminish your returns, but to protect any downside, you're going to take short options out against these stocks. I don't do that personally because honestly, I love the stocks I hold. I don't really care what level they sit at, considering I could hold these for the next 50 or 100 years. Doesn't really phase me at all. But if you are managing and you're terrified of making your shareholders look bad by seeing those downturn days because they can't stomach it as well, you take out short positions. It's also a good way of mitigating risk against taking on volatile positions like that. If you are going to take on a risky, really volatile company, what you might want to do if you're buying into the cycle of something like a Bitcoin right now, which unfortunately I think you can't short Bitcoin right now, can't you? Well, the thing about short options, guys, are a lot cheaper to take out on. I don't know why I'm talking about day trading here because I know a lot about it, but I don't personally ever do it because I am the passive income investor. I like passive income that I don't have to think too much about so I can focus on other things. But at the same time, if you wanted to day trade those companies, guys, you usually want to take out, say you're putting $1,000 into one of these companies. Well, it might not hurt to take out $50 or $100 in short options against it in case you're wrong. Because those short options, if you're right, are going to be probably worth about $1,000. So it really mitigates the downside at a cheap risk. But at the end of the day, if you end up working it out, you make some money, you're still going to have to lose that $100. So it's like an insurance policy. You can take out as much as you want of, and it's just the smarter way of probably playing swing trades with risky companies. Did you pick up some Tesla shares today? I have not picked up any more Tesla shares yet, but it's going to be on my list the second we get into the new year. But bear with me here before I start coughing out a lung because my throat's just burning up here. And a good reminder, guys, I would love for one of you to join. If any of you guys have any questions, you want to join the live chat, you don't have to join even with your face on it. If you just want to come in and you can talk on the mic as well. And I hope there's a like button somewhere on this video, because if there is, consider slapping a like, because you've no idea, going through a cold and trying to do these live streams, my throat's going to be mangled tomorrow. I'm holding back big time. I've been coughing all day here. So I'm kind of proud of myself to get up and do this for you guys, and I hope you're enjoying it. But let's take a look at some of your questions. Day trading, Lol, with all those no thanks. Yeah, I totally agree. It's your versus the bots when you day trade. The best thing about the bots is the bots move big volume. That's what I like about bots. I don't know why everyone's, you can't out trade the bot. The problem with the bot, guys, is when we see what you would call a triggered sale, which is pretty much what happened at the beginning of 2018 there. Let's just take a look at the S&P 500, because this is what was considered, what was it, hyper trading or whatever it's called. Let me just take a look at the chart here real quick. So what ends up happening with that, guys, is it actually gives you better positions to take on trades, because all of a sudden, if the stock market drops a little bit and it triggers the bots to sell at whatever the sell price is, because a lot of people are probably using stop limits and things of that nature, boom, all of a sudden the market takes a big dip. And then when you see those happen, man, they're actually pretty nice because they give you decent opportunities where we're going to see markets take on bigger than normal losses, which is what we saw back in 2018. Was all of a sudden the market took a little bit of a dip, probably a lot of hyper selling going on, and boom, the market took a big drop, only to come back within a fair decent amount of time, right? Because that's what the market seems to do anyways. Not that it's going to guarantee to do it, but it's on the longest run in historical history, which is absolutely wonderful. I mean, I'm glad that I stuck my fears out of the side, focused on good fundamentals and companies, and have done quite well because I feel bad for anybody that's been missing out on this run. Sure, it could turn around, black swan events, anything like that. Obviously, I'm not trying to let my ego get too involved in it, but I just, like I said, to see this going on in the real estate market, stock market, for the people that have no idea it's even going on, that are worried about student loans and things like that, I feel so bad because it just seems so ridiculously easy, which is not a good thing. When things get too easy, dumb money comes in. Dumb money doesn't think, it just does, which usually causes more volatility and more downside risk. So let's take a look here. What else we got going on, guys? You guys still want to talk about them MJs? It will be under $1 within 6 months. Is that your prediction? I'm going to throw that up there as your prediction. We're throwing you in front of the limelight here. Take a look, guys. We're making real predictions here. How about we start talking about our 2020 stock market predictions? We'll start with the MJ sector, starting with this gentleman saying that Aurora is going to be down to $1. Now, I am honestly going to be on the flip flop for that. I think we might be in bottom range here. I'm not going to. I'll make that a little bit of a prediction for my next 6 months. It's a gamble. That's my gamble. I wouldn't put money on it. I'm not going to put money on it. I'm not advising to put money on it. But if we go back to the stock, guys, I honestly think that when these funnels open up, I think we're going to see some good things happening here, right? Considering Aurora or ACB, nonetheless, here we're sitting at $1.91. So if it drops to $1, we're going to see it basically hit a. I can't even see the market cap on this. That's so annoying. Well, volatile. I don't know. We'll see. I think we're going to be starting to near some bottoms here, guys. These stocks are down a whopping 80%. But if we look over the 5-year rate of return, we're still up 500%. So I mean, it's the macro that's getting people's heads caught up in the game. But I think we're starting to meet half decent range here. And I think if they start proving what's going to be going on over the next 6 to 12 months, you could see these stocks starting to see a bit of a highlight reel coming as their revenues start to increase, right? So I mean, cross your fingers if you're holding it and you're down. Don't buy any more of it for the time being, and just wait, because if your stock's not the one that wins, one of them's gonna, and that's the one you're gonna want to own. Even if you have to pay a premium for it, let the people that are gonna lose money figure it out for you. It's worth paying that risk to let somebody else lose, so you pay a little bit of a premium so you don't. A little bit of advice here, guys. That's what I'm doing anyways. But and again, I still have exposure. If you want exposure to these companies, own it through the big guys. Own it through your MOs. Own it. That's why I own MOs. Some guy was saying, like, it's why I own so much of it as well. But own the MOs of the world, guys. Own your Constellation brands. Because look at Constellation brands. Yeah, it's down, but it ain't down like Canopy Growth Corp's down, right? So I mean, it's just the smartest way of doing it. Do you guys have any other questions? I mean, I don't know other than the crazy downturn we're experiencing. I want to know what other stocks you guys are down on. What's your worth company today? What's going on with your portfolios? Currently looking at, I'd still Tesla's going to be the worst, but some other big losers today on the portfolio. MMO is obviously down 1%. The next biggest down is probably my RioCan stock and my J&J. Which I will probably be considering a few more share purchases in. My big plan moving on to probably tomorrow is I will be selling. I have to finally decide to sell MO out of my regular account and move it into my tax-free savings account. But we're going into the States. Actually, that reminds me, because Matthew was just throwing this up. He says, with more states legalizing this year with the coming election, the MJs in Canada will be left in the dust. Yeah, that's the sad dilemma. We might as well just keep talking about the sector, the MJ sector, guys. You just want to keep talking. I wish I could see a like button down here, because I'd say slap a like if I could see it, but I'm on StreamYard, so I'd like to know, because if you guys just want to talk about that, I'm totally down. Because it seems to be still one of the most hyped parts of the market, considering Bitcoin's been burning out here, and people aren't sure what's going on with these downturns. But if you wanted to put some money into a REIT right now, what one would you choose? RioCan is just the one that I own, man. There's a lot of good ones though. Small cap REITs right now in Canada are exploding. Commercial REITs, check them out, man. There's a bunch of them. Just Google commercial REIT ETF, start breaking down the components, and check out what ones, because some of them are on fire, man. TNT is a small cap my buddy owns and part of our chat group. He really loves his TNT. It's up quite a bit. Pays like an 8-9% dividend yield. Problem is they're small caps. They haven't been around for very long. The leverage is okay, but I really like RioCan. I understand Toronto. I love what they're doing. They're moving away from all the malls. They're doing things very, very properly for the current conditions that exist. So I'm looking forward to seeing their projects pan out over the next couple of years. I'm fine with collecting a bit of a lesser dividend to know I'm holding a company that has survived a great recession and owns real estate that is in the city that I work. So I mean, it just makes sense, right? Considering how much Toronto is exploding right now. Give me one sec here, guys. And no, I did not pick up any Tesla shares today. I would like to see Tesla dip a little bit more. That would be nice. I would like to pick up some more. I said that a little bit earlier on. So your REIT pick would be O and NRC. Yeah, O's down a little bit. I have a hard time with REITs. I have a real hard time with REITs, guys. The problem with REITs is the way they're leveraged and understanding what's going on in the markets. Because when you buy into these REITs, you're playing on a level that's a little bit more harder to grasp. I know it's like the Grant Cardone kind of investing, but when you're doing it through REITs, there's a lot more going on than you're going to be aware of, as if you were looking at just one portfolio of those REITs, because you're not on the ground floor, you're not experiencing the project costs. There's a lot of new development going on, a lot of moving leverage, a lot of that amortization to kind of devalue and also basically mitigate their deferred taxes. There's just it's a whole different level of understanding. So I mean, you got to be a little bit careful, because you could end up in a situation where you're looking at something like an SNH, which is a senior housing property trust. And I really enjoy the weird REITs. When I got into REIT investing, bro, I was looking at things like graveyards. I was looking at things like, I was looking at weird stuff. I like the interesting stuff that's under the radar, because I like finding those deals of good, solid, recession-proof kind of investments. And RioCan, to me, it's done it before. It's been through it all. So it's a long-time company. I can trust its monthly payouts. I enjoy it. It's safe. So I buy it. And then just for the dividends, I don't really care about capital growth. That's why I focus on companies like Tesla, obviously. But for my dividend holdings, which is why I'm still holding the banks too, right? Which I'm complaining about. But nonetheless, looking at them REITs, the only weird one that I found that I really, really enjoy, which is the most dramatic REIT I could have ever bought, is GEO Group. GEO Group's been a really interesting prison REIT. A lot of hate. Love it. It's giving me some discounts for the time being. Smash the like button, people. Yeah, smash the like button. I can't even see. Somebody post how many likes we got on this video. I'm like in a weird state here. I don't even know if I should be live streaming, guys. I was so out of it today. I ended up sleeping most of the afternoon away, but my body just couldn't do anything. Couldn't do anything, guys. Just dying out hard here. I know a lot of people. Let's take a look at OREIT right now. I always found, like I said, the more interesting the REIT, the more I'm going to enjoy it. When I went to Vegas, I really took a deep dive into like MGM Resorts, or the casinos. I started taking a big look into them, and I really kind of got attracted to Wynn Resorts. But the problem with these companies is I don't fully get the Vegas real estate that much, and MGM is starting to scale down. They're trying to sell the main part of their brand, which was that it's the main MGM Grand, right? I think they were trying to leverage that off here at some point. But Wynn Resorts has been doing relatively okay as a swing stock. I know Jeremy on the Financial Education Channel has been buying it, and he swings this stock quite a bit, and it seems like a decent swing trade. But the problem, if we take a look, the dividend yield honestly isn't high enough for me to enjoy the volatility. If I'm going to be experiencing volatility like that, I typically want a higher dividend yield to help me ride it out, because if I'm trying to swing trade it, it's probably going to take you a good year or two to build up a position, and cost averaging it into the bottom, considering you can only really know where that range is. But taking a look at something like GEO Group, you're going to see the same kind of volatility, but the volatility is to the upside. And on top of that, we're getting a stupid, fat, juicy dividend yield of 11.46%. That is affordable. Trust me, they can afford to pay that for now. Vegas has been 10 years since I've been there. I'm getting old. Yeah, bro, I went to Vegas this year. I hopped on over there at the beginning of the year to get some bucket list items out of the way. Not the bucket list items most people would be used to, but as most of you know, I'm a full-time magician. I do a lot of performing kid shows. I don't mix my worlds together. This is a whole nother bubble to my life, is this stock market stuff. But at the same time, I deal with a lot of magicians in the community to some extent. And there was a guy I was buying a product off of that was very, very famous in the 80s. His name was Tom Mullica, and he used to do these really famous cigarette routines. And essentially, within a week or two after me talking to him, he went in for a very routine surgery that ended up getting botched, and he passed away. And I realized that I grew up idolizing many of these magicians, and what ended up happening was I'm like, I'm young. Why don't we just do it? I'm in a fairly good spot. So we went and we decided to watch all of those idols. We went and saw Copperfield. We watched David Blaine, Penn and Teller, Chris Angel. Kind of treated ourselves within reason. So I mean, it was an interesting ordeal, and that led me into this new inspiration because Vegas is a very fascinating place. It depending on how you look at it, I know some people see it as a depressing gambling a hole in the ground. But honestly, for what we were doing and for what we got to experience, I thought it was fairly half decent. I kind of enjoyed it, but it's more my atmosphere as well, considering it's mainly what I'm involved with. But 2020, man, what's it? What's it? What is it for 2020? Got in stock for you. Well, 2020, ladies and gentlemen, is going to be. I thought 2018 was a roller coaster. Oh my goodness, I don't even know where to begin. I quit jobs. I literally bailed on jobs that I could not handle anymore that weren't producing income. I've kind of strictly started focusing on passive income sources. I literally only do passive income and shows part time right now because I really want to hammer this before I consider maybe doing cruise ship performances or something of that nature. I want to be able to travel and make money. So I want to offer value in the way of providing online businesses. So what we're going to do in 2020, I'm going to only hint for now, but I got some big plans coming in for 2020. 2018 has been a wild insanity. I mean, we did San Diego with StockTwits. Vegas was crazy. Got a lot going on here, guys, with the traveling, which was fun. I wouldn't mind going to see some more of like foreign countries, or heck, maybe even go and visit Matt in Trinidad. Might be fun. But yeah, there's some good stuff I think coming in 2020, ladies and gentlemen. But I don't want to overstep my game here before I get into it. David Blaine, man, I haven't heard that name in like 15 years. Yeah, David Blaine is an interesting dude, but it was a good show. He was here in Toronto. I think yeah, he's a Canadian. Interesting guy. But nonetheless, I'm not overly involved in the Magic community to an extent. Like I said, guys, I kind of stick in my own little bubble, and I like just focusing on it as business. But at the same time, I got to creatively explore some other avenues of income to protect myself because my job, I have no idea what I'm going to make. And this year, my income was not nearly as good as last year. And if it wasn't for my stock market investments, my income would be trash, below poverty line. If that is not, well, we'll reveal it coming into the new year. I'm just waiting for my final stock performance valuation to come in, so I can see what the entire year looked like. Because I'm confident if the stock market even stays somewhere around where it is, or even drops another, say, $1,000 or so in the portfolio, I'm still going to be looking probably at a good 15 to 20% return this year, which I just want to take a look at and then show you guys my income and show you how much I made versus how much I actually made at my job. Because it's a very weird thing. But like I said, if it wasn't for that, I'd be below the poverty line, ladies and gentlemen, which is a lame. So what we're going to do is we're going to start working on passive income sources and working on lowering my costs, because my costs are extremely high, including things like my car. My business costs a lot of money. So we're going to start looking for work that has higher income. We're going to start mitigating risk and diversifying outside of the stock market into online businesses, which is going to be a big thing that I'm not going to get too involved, like I've been saying, into 2020. And then we're just going to, yeah, start focusing on at some point where I can take my other businesses and just keep growing, guys. Try and keep growing and see if I can't start producing a half decent income here off a few other things. But we did a lot this year, guys. We did a big show. There's a huge show that I did. That was a lot of fun. I rented a theater. I didn't break down the numbers for that. I don't think I should though, because I did make a little bit of profit on that one to an extent. So it'd be fun to show you guys what it's like putting on a big theater show. And like I said, if you're still just jumping in here, the glasses, I don't want to take them off because they probably look horribly sick. Horribly sick. So, ladies and gentlemen, as the evening rolls in, we've been streaming for a whopping 44 minutes. And I want to know, what are your 2020 goals? What are you guys buying? What do you want to do with your portfolio? and how much do you plan on saving? Because luckily, even though I don't make a huge amount of money, I've frugally invested, and I'm still capable of putting usually between $500 to $1,000 away a month, which maybe we should take a look and see. Because I mean, if we can make 20%, I wish. I don't think it's going to be 20% next year, but let's hope the stock market continue. I'm being too optimistic here. I'm going to put that away. I don't want to look at the compound calculator. In short-term macro, it doesn't make sense. There's no point doing macro. I mean, I got to look at least 3 to 5 years out at all times. I'm always looking to what I want by the time I'm 30 and how much work it's going to take, and try and keep stepstoning my way there for the time being. But we're getting there, ladies and gentlemen. We are getting there. My 2 to 3 year plan is slowly unfolding. I know I'm going to make a whole video on this, so stick around for that a little bit later. But I know Microsoft is at all-time highs right now, but I am a big tech person, and I see big things coming for Microsoft. Microsoft has gotten real lucky, guys, considering Bill Gates doesn't hold a dime of it anymore. I bought Microsoft for a very fascinating reason, and it was just for the gaming aspect of it. I wasn't too aware or paid too much attention to the cloud services they were involved with, and then boom, they overtook some crazy cloud service part of the game. They took a lot of business from Amazon, some Google. They were the second one or the top two sources for cloud computing with Amazon. So I mean, they definitely took a big chunk of that, which exploded their. Actually, have you guys even looked at Microsoft lately in their balance sheet? I mean, take a look at this. Just take a quick peek at their charting, because it's a little bit insane. If you've never seen it, I find their PE ratio is a little high. It always seems to sit a little high. It's right now around what, 29, 30, and it's one of them $1 trillion market caps. But let's just hop in, because I just want to show you guys what their chart looks like and why you should always own these companies. These are the brick companies that you just buy. You don't think about it. You just buy them. You shut up. You don't complain. It's like telling a little kid, just put these in your portfolio, just own them. Don't trade them. Just hold and buy them for a lifetime, guys, because they have so much money. They could fold on all of their products and have something new started up tomorrow. It's just a beautiful thing when you can buy into a bank account. It's not companies anymore. We're buying into bank accounts. Unless Andrew Yang gets voted in, and then all of a sudden these companies are getting dinged for huge tax deductions. That's an interesting conversation. We should work out the metrics to see what it would cost these companies to be paying, a 5-10% tax, guarantee have to pay tax, which Apple does not like doing. And I'm sure no company likes paying tax. I mean, that's the whole point, right? But scrolling down here, guys, let's just take a quick peek, because compared to Apple, let's just think about this for a second. Compared to Apple, which we were just looking at prior, look at the difference. This has consistent revenue growth. Apple does not. Apple has been choppy lately, guys. So it's an interesting competition continually between these two companies. It's like the breakdown, the battle, the fist is the fights, guys. I love it. It needs to be like back in the early 2000s when we had the weird the Mac and the old guy commercials. You remember those days? Do you remember the days of the Mac guy against the old nerdy dude that's got PCs? I want to go back to those days. We need to. I love the fact that these two mega giants constantly compete for the first $1 trillion market cap. But don't get confused, guys, because there are probably companies out there that are much bigger than Apple and Microsoft that aren't public. People keep forgetting that. Excuse me. The sickness, it gets to me. But back off, guys. I don't want to kill you by coughing my lungs to death. My 2020 goals are get more dividends and defensive companies. Yes. Excuse me. We are dying out here, ladies and gentlemen. We are dying out. If any of you want to help out my voice and join the live stream while we're sitting here, we're at 10:30, guys. I'm probably going to stick around for a wee bit longer, but I would love for any of you to hop on if you wanted to just even be a voice chat. I'd love to know what some of your opinions are to save my voice here, if you wish to do so. Before I just hop off, but your 2020 goals are more dividends from companies. See, I might touch base on your dividends there. Most people are probably going to be dividend focused because we're always paranoid that the markets are continually hitting into all-time highs. And when they do that, people get a little fearful waiting for the dip. So the problem is I would still rather own at this point going into 2020, though I am always focused on dividend plays. I still like growth plays like Tesla, which I'll probably continue to buy for as long as it stays below $500 in the macro. At that market capitalization, what would Tesla be at? Because I always just kind of try and work out where I want the market cap to sustain for what I'm hoping they're going to be able to achieve. So I mean, I when you get the growth of, you still want growth, man. The dividends are great, but a company like O Realty Income might be a good one for growth and dividends. But at the same time, like you can get up a lot when these companies take off, and Tesla could be a 3 to 5 year play. But at the same time, for as long in the macro it stays at this, around that $80 billion market cap range where it is now, I don't have a problem paying for that, which to some people sounds absurd. But honestly, when it comes down to the gamble and the risk of the company and what I'm hoping it's going to do in the short aspect of things, which will be 3 to 5 years, is that self-driving will be accomplished. If self-driving gets accomplished, yeah, you can absolutely join through your phone. That would be awesome. You can just take the link. You might have to log into a browser. Let me get you on here real quick. I'll send you the link one more time. But yeah, if you wanted to join, you don't have to use video or anything. You could just use the voice if you don't want to see yourself, and we could just have a quick chat. Looking forward to anybody that wants to join and talk about some maybe their goals or things like that. What's going on with their portfolios or their personal investment philosophies outside of the markets as well. What are you guys doing for work as well? Do you guys have any other personal work goals, achievements that you're looking forward to? Because that's going to be the big thing going into 2020, considering what the markets are doing right now. I think we're not going to see as good a growth next year, but I could be wrong. I did not expect Apple to or do what they're doing now. To be honest, I really just couldn't imagine it when they were already sitting at those $800 billion market caps. I couldn't see another $5 billion coming into play. So we got Lydia coming in here, so we'll see if we can get her to pop on. I'm gonna hop you in here real quick and hopefully.
Did it work?
There she is. Yeah, you're live. What's going on, Lydia?
Oh, cool. I just got off work and then I saw a live stream for stocks and I was like, oh, let me
Oh
go
well.
join that.
Thanks for hopping on. I usually see you hopping around in the comments section there, and sorry, you will have to bear with me because I am a bit dying here right now. But
No
if
worries.
you're comfortable talking about your finances, I guess I'll ask you what were you getting
Sure.
off work from?
I work at a law firm. It's actually one of the biggest ones in Southern California.
Good for you. Wow,
Yeah.
impressive, impressive. Well, how long have you been working there for?
I've been there over a year. I'm a case manager, so I have like 3 assistants. We do like personal injury type of cases, like
Not bad,
auto
not bad.
accidents and stuff. Yeah.
Which is the ones you always see after Judge Judy, I imagine.
No, it's
No, no.
like car accidents. So like Lyft
Yeah, yeah.
drivers, they have like $1 million policies. So we take all the money from Lyft, Uber.
Oh wow,
That's
nice.
why I don't invest in Uber or Lyft.
Yeah, I don't particularly enjoy the Uber stock too much. I notice a lot of people seem to be into it lately, but not the biggest fan. So, yeah.
Yeah,
So, investment style. How long you been invested for?
I've been investing since September of 2017.
Not bad.
Um, I have like my Roth and M1, and I have like an account I did for my daughter. It's not a custodial account. I'm just gonna give it to her when she's 18. And
Nice.
I used to have Robinhood, but I cashed out that portfolio so I can pay off my debt, and I'm restarting my portfolio now through TD Ameritrade.
Oh wow, good for you. Not bad, not
Yeah,
bad. How old's your daughter?
she's 10.
Oh wow, so she's getting to that age, eh? Not bad, not bad.
Yeah, yeah. So she knows
Uh,
all about stocks, dividends, and
oh, you got
all
her
of that.
already warmed up, eh? Oh my
Oh yeah,
goodness.
yeah. I gotta
The
get her started young.
Yeah, the world's in a whole different place. Even in the short time I've been floating around here, nonetheless. I mean, even when I was younger, before YouTube was just coming up, like this finance stuff wasn't really floating around as often, right? Like you really had to know somebody or be somewhere. So I mean, it was weird when I started watching BNN, and then I started getting into stock twits like 5 years ago when they first came out, and then before I knew it, all of a sudden, like I'm listening to these people on YouTube, and here I am on YouTube all of a sudden with you. So. I'm glad you're here. I don't know, what are your 2020 goals? Do you have anything you'd like to add?
I think I just want to build my TD Ameritrade portfolio. I'm not really too concerned about the stock market going up or down. I mean, when I entered the market, it's pretty recent. Like, I've only had my TD Ameritrade portfolio for about a month or so. So my goal is, I used to put all that money towards my debt. So I would put maybe like 2-3 thousand towards my debt every month. So I'm going to put that now towards my portfolio, and I'm just going to do dollar cost averaging strategy.
Nice. So how much debt did you have? If you don't mind me
I
asking.
actually, no, it's okay. I had a truck, so I had $40,000 of debt. Um, just this year, I put in about $25,000 in my principal.
Oh wow, yeah, the car payments. Those always. Some people. I'm glad. So do you still own the truck then? Did you get all that paid off?
I only owe $1,100, so I'll have that paid all off next month. That's why I
Okay, so
started my portfolio.
you'll own the truck.
Yes,
Okay,
it's
good
getting
for you.
closer.
Wow. Yeah, most people, I know a lot of people that are negative equity on vehicles and stuff like that. I've had the luxury of never owning a brand new vehicle, but at the same time, not that that's a luxury, but at the same time, I've also I experienced the pains of vehicles, man. My car, just the amount that I drive, I'm paying somewhere around $500 a month. I've cut that back quite a bit.
Yeah.
Recently, I'm hoping I get my insurance to drop a little bit more next year. But at the end of the game, it's so terrible because I know people working regular jobs where they don't have to drive vehicles and they're able to just produce such a higher amount of income. Because man, when a vehicle's costing you 6 to 7 thousand bucks a year, but I imagine how much driving do you do within a year? How far away is your job from where you live?
I work in LA, so my job, the traffic here is disgusting. It's like 24 miles away, but sometimes it takes me over an hour to get there. But I
Yeah,
have a 2017 Toyota Tacoma, so Tacoma at least kind of holds its value a little bit better than other cars.
I've heard that.
Um,
Yes.
yeah, and then Tacoma is super reliable. So I'm planning not to really ever buy another car. I'm just a little embarrassed. I got myself in so much debt. Like I didn't get any like student loans or anything like that. And then I got 40 something $1,000
We've all
debt.
been there. Well, I imagine some people that listen to these streams are pretty young, and I don't think they're gonna understand what it's like to be in debt. Because, yeah, I definitely spent a lot of money in my earlier days, though, and I took out $20,000+ loan. And back in the early days, when you're not making a lot of money, it's a bit more of a challenge. Um,
Yeah.
so I'm glad that I got out of that. It took me 3 years though. It took me a little while, and that was before Dave Ramsey. I didn't need Dave Ramsey to know I did not want that debt. I'm like,
Oh, I love that guy. Well, I think that's why I got it. I started getting like all worried, like, oh my God, I don't know. I would invest and I was doing really well. Like when I cashed out my portfolio, I think I had like a 25% return. And then I just said, well, I feel guilty every time I put money in my portfolio since I have this huge debt. So I think it's probably better if I cash out now and then I'll put down my debt and then I can concentrate on my portfolio. So that was
so you
why I did that.
so other than that, you have no debt. You do you own a house? Do you have a mortgage?
No, I rent and my rent is really low. Which because I've been here so long. Like in LA, you don't like my rent's only $900 and I live in a
Oh wow,
house and I have like a garage, a yard. So it's not really it's not
nice.
common. Yeah, so I'm planning to stay here. Like my mom, she has a duplex. So like she rents upstairs, the upstairs rent pays the mortgage and she has 4 garages. So she rents the 4 garages and that pays for her taxes.
Not bad. Good for you guys. That's a good situation, right? Because I'm still looking for a few places, but I got some buddies downtown that are getting good deals. To try and find those cheap places to rent that are comfortable are a big challenge. I don't know about LA, but I'm up north, so it's a little bit colder at night. It's not.
Oh, it's really pretty up north. I've been up north. It's really, really pretty.
If you enjoy the snow and the cold, I'm not a fan whatsoever. It's not my forte anymore. So I'm trying to find a way to get out of here for the winter. But I'm going to huddle down for this winter and either just save up or try and find some work outside of the country if I can achieve it. But we'll see
Yeah.
how that goes. That's the long term plan here, nonetheless. But yeah, so what kind of companies are you investing in? Are you sticking to ETF strategies, or how are you
No.
investing for your daughter as well? That might be an interesting question. I'm sure people would love to know.
Yeah. So I like researching companies and I like keeping up with them. So I just look for companies that are I know will be there for a very long time, and I don't mind buying if it's high or low, or and I don't freak out if it drops. So right now I only have 5 companies. I have Unilever, so that gives me international exposure outside of the U.S.
Yep.
Great dividend stock. And I have Visa. I love Visa.
Visa's
I have
awesome.
mhm. I have Microsoft, and I have ABR, which is a REIT. It invests in like senior homes, medical facilities, and
How
mortgages.
how's that one performing? There's
Really
levered in
good.
the list.
If you look at ABR, it has very good capital appreciation, and it has a very good dividend. The dividend's like 8%. It's not a monthly dividend payer; it's a quarterly. But
Oh wow. Yeah,
yeah,
this stock
ABR. Yeah, it has.
5-year
I
rate
think
of return is 111% with an 8.3% dividend yield. That one's been on a tear. My goodness. Not bad. Oh, we still got you here, Lydia? I think we lost Lydia for a sec here, but we're taking a look at her positions, and ABR on the New York Stock Exchange. $1.59 billion market cap with a PE of 10. What is this company, man? I've never actually noticed ABR before. I'm going to hop into the Yahoo Finance because the way you described it there sounds like you're getting some pretty decent exposure and diversification. So let's just hop on here real quick. And if we get Lydia back, she can pop back on here because I want to hear what her investment strategy is for her kid as well. It'd be neat to see, but I imagine it's roughly the same idea. I'm sure you're just cost averaging into some decent, solid companies. But I'd still like to hear what your list is, Lydia. Like, are we buying the S&Ps? You said you got some Microsoft, some Apple. We're taking a look at ABR. Love to know what other ones you got here, and we got Nick on here as well. So we're gonna get a few of you guys to join in. So we'll see if we can get Lydia back on here, and I'm gonna join Nick. Nick was on before. We'll check Lydia though real quick. Sorry, Nick. Just bear with me for a second. Are you still here, Lydia?
Yeah, can you hear me?
Yeah, we're gonna get Nick to join on here as well. So I'm just gonna pop him in. So say hi to Nick. We'll give him a quick wave there. But I'm just popping in here, and I just want to take a quick look. Sorry, to this company here, ABR, because I've never really heard of it, considering it's a realty trust, and we're looking at some of the total revenues. I don't know if we can see that.
Yeah,
good company.
I'm gonna double-digit growth. It keeps increasing its dividend as well. The payout's not that high for a REIT. I think it's in like the 80s. I know with REITs they're usually like 90 or higher.
Yeah, it's definitely going to be added to my watch list, and I'll definitely do a deeper dive on it because that's kind of a good looking chart. But Nick, what's going on, brother?
What's up, man? How you doing?
Getting over cold. I'm wearing the glasses because I probably look like a disaster right now. I literally slept until like 4 o'clock today. I was just brutal. I'm still trying to keep my voice together here. And we also got Lydia on as well, which she just we had an introduction there. So Matt or Nick, I'm already throwing my head out. I think your name was Matt. I just chatting you in the group there. I saw you. No, Matt's not floating around. He was going to, but I think he's out with a buddy right now. So I'm sure he's just trying to enjoy some friend time. But yeah, Nick, how's your evening going? What's going on in the down days of the market?
You know, it was looking rough this morning. I started my workout and we were down like 210 at the open, and then I watched it slowly come back, and Apple ended up positive, so that really set my account in the green for the day. So that worked out. But how'd you do today?
Same boat, man. I got up first thing this morning, checked the markets. I was down quite a bit, a couple $1,000, and then I was just like, oh, finally some profit taking. And then all of a sudden, like, I just looked at it probably around 3 or 4 o'clock, and I was shocked that I was sitting up a half decent amount, and probably just because of Apple. Oh, we lost Lydia again, but sorry about that. I still wanted to keep her into the conversation there, so I think she might be on the road or something. So please join us in the chat group there, Lydia, when you get home, and safe travels if you are still trying to get out from work. But yeah, so I guess everyone's still pretty happy. It's gonna be neat to see what the markets open up tomorrow like. I was showing this a bit earlier today. We'll scroll through here again on my positions.
I'm doing every year at the end of the year, I calculate what I did in passive income versus like what my dividends were for the year. So I'm kind of getting myself ready to update my Excel sheet. But dude, this year was pretty decent. As of December 26th, in pure passive income this year in the market, I did $30,392.70. So really, I made more money in the market than I did on my real estate rental, which is funny. So, and then my dividends per year, again, I didn't really go after like the cheaper energy to build this massive dividend income. I went with like blue chip companies that have dividend growth. So my dividends currently on my $105,000 portfolio was right at 2,600. So I'm looking for 2020 to up my dividend income. So I'm really looking at either I'm just going to push Caterpillar for 2020 and Chevron, and those are going to be like my two big wigs.
Yeah.
So I already have a big AT&T position. Apple's too expensive to add into. I like Boeing, but it's expensive at 300 still, or 330 or whatever it is. But Boeing has so much upside. You know, it's got all the bad news built into it. Any little bit of good news, Boeing's going to go to $500 a share. So, yeah.
Yeah, Boeing's been an interesting topic lately, considering the CEO just stepped down, right? So,
well, it's kind of good. I mean, there was tons of like bad juju with him, and I guess the FAA, and you know, for how long did you know that this was a problem with the plane, and then you just worried about pumping numbers out? I mean, you got to have a good product first to get people to believe in your company to return to shareholders. So, I don't know about that whole thing.
Yeah, I don't trade around with those companies too much. I keep looking at them though, because Air Canada has been one of like the best performing Canadian stocks this year. But overall, yeah, man. Can I ask you, before I skip over that, how much money did you start out at the beginning of the year? So what did you start with, and then you're up your 30K? Just curious.
Let's see. Both. I have two portfolios. I have a 401k, and then I have an actual individual broker's account.
Yeah.
So I started at 37,000 for both accounts, and this year I ended up at 106,000. I'm at right now. So I had for my deposits for the year, I put 36,500 in the portfolio.
Gosh.
And I did 30,392 passively.
And I love how you got that written right there. I love how you've already
it's kind of nice though, because earned in, I don't want to get too much in my own financials, but earned income, I did decently over six figures, and I managed to put 36,000 in my portfolio, did 30,000 on top of that. And my rental, I took a loss on this year because with gardeners and then maintenance requests and then mortgage. But I know my equity's building, and I'm out here in California, so I have good equity built up in that one property. So I'm slowly, I'm like an index fund. I like to look at myself as like a business. Would somebody want to invest in me? So I'm like, how much debt do I want to build in mortgages and equities versus like earned income and cash flow? So it's a lot of variables. You know how it is with investing. And
no, totally agree. It's actually the smartest thing I think you could do, especially going into the way the markets are. Not that I'm saying people shouldn't be investing, but to continue to diversify, which is what I've been attempting to do here as well. But congratulations, man. I think my portfolio, I need to break it down. I'm glad that you've done all your numbers already, because I'm going to be doing that probably in a day or two, because it'd be neat to see how much I contributed versus what the capital gains are going to be. But I think I started the year around, I don't know what it was, and the account was sitting at like 104, and now it's somewhere around 131 or 32, but that's CAD, so it's a bit of a different world. But yeah, considering the income that I had this year, I was kind of shocked that we've had such a good growth in the last month or two. But what's the saying that most of the capital gains that have happened in the market were over like it was a small handful of days, right? Over the last 20 years, I think it's below 100 days account for all of the capital appreciation in the market. So it's just being in the market on those days is what's more important than trying to capture the lows or the.
It seems like 2019 was nuts, and as the market gets bigger and bigger, and people who are experienced kind of know, like, the most famous saying, like, be greedy when others are fearful, and be, it's like, dude, the market is so high. Common sense, like, my mind is like, Nick, start moving money around to things that didn't inflate in 2019 and kind of lock in your profit. But oh my God, my portfolio is green like every day. My heart is like, yeah, let's do this. But my mind is like, whoa, Nick, everybody's in the market right now. So, I mean, how do you think 2020 is going to go? Do you have any kind of like prediction?
I had no idea this is how 2018 was going to go. It's fun to predict, but in the short term, I'd rather make predictions on companies in the short term than try and predict what the whole market's going to do. Because I honestly think most of the companies I hold are going to be 100% recession proof, and the things that are going to move them will be something completely different than just some basic market averages, unless we see like a big ETF dump. Because the only thing that I'm most worried about in the markets right now is what I talk about with Matt a lot, which is dumb money. When dumb money gets into the market, you usually see a lot more volatility, like we saw in 2018, especially with like hyper or what is the speed trading with just algorithms and stuff doing a lot of trading for people and stop limits and whatever. So I mean, what I'm going to be more worried and it's going to be more exciting to see is the next big punch of bad news, which I don't know when that happens. It could be any time, it could be in a year from now. Who knows, right? But the next punch of bad news, I think, is going to hit the market a lot worse, and we're going to see it'll be like 2018. I just think we're going to see a really big dip, and it's going to be bigger than the last one because there's so many people that just don't know what they're doing. And like there's a lot of videos out there right now on just how ETFs are like pumped with dumb money because people don't know what to do, and they hear what we're saying, which is cost averaging. They don't even think about it. They just start throwing it in ETFs, and then all of a sudden, whether they're good or bad stocks in the S&P, so it's just then something bad's going to happen. People are going to get paranoid, and we're probably going to see a bigger dump. But I don't think it's going to be any kind of major depression or recession. I mean, that's going to be
I don't think it'll be anything like 2008 will. I mean, we might get a 20-30% correction, but it's not going to be like catastrophic bloodbath, I don't think.
So it'll be neat though, but I think it's going to be even neater to see if it doesn't happen. I'm honestly like just so flabbered by Janet Yellen's words, and I'll never get over them. I'm still waiting for her to be wrong, but that statement just blew me. When I got into investing and I saw that statement, I was investing in gold. I was paranoid as hell, and I'm just like, they were like, don't trust them, don't trust them. And I'm just like, here's like a Federal Reserve chair lady here, just like, yo, things are going to be good. Not in our lifetime. And it's just like, I don't think so. That's how it works. But it's just, what do you see? Like, I want to sit at that board and see, like, what is the plan that makes you so confident? Or is it just the fact that we can continually print, trillions of dollars?
Yeah, exactly. If the Fed can just keep pumping.
Sorry, I'm just going to interject just because I just wanted to point out the fact that back then, to talk about, trillion-dollar companies was absurd. So back then when they were printing trillions of dollars, people were losing their marbles, right? But we live in a much, much different time, which really reflects what quantitative easing helped achieve. But at the same time, people have to remember that we're talking about market caps that are unbelievable to what they used to be. So, I mean, you can call it overinflation, but we're talking about income here, we're just talking dollar income, earned revenues. So, I mean, when you're building in $250 billion in revenue, that wasn't something that was possible 10 years ago, or so we thought in certain industries. But sorry, anyways, what else can you add here? I'm kind of rambling.
Another thing that kind of concerns me is obviously the market is really inflated right now because everybody's in it and money's crazy. So I kind of thought about, well, should I pull back in my stock investing and try and get another rental property this year? And I thought, because I kind of have like a thing for myself, like every 100,000 I do in the market, I got to get another building because, like I told you last time, I like to piggyback my investments. So you have this big safety net, you're diversified. So I thought, do I wait for a small pullback in the market to get back in, or?
Yeah. I'm just
showing
stocks to continue.
So I don't know. I'm looking at maybe getting another property. I want to keep pumping the market because I tell everybody that stock market investing is better than real estate. And I debate so many people on this because look at me, I made more money in the market this year. I know that's an anomaly, but I deal with because I'm in real estate as a profession, and I deal with these people, these investors, with dividends and equity appreciation. You never have vacancies. You never have maintenance requests. You never have bad tenants. You never have there's so many things that I've personally seen in the real estate field with rentals that I like my dividends.
Yeah.
They're always there. I mean, I know they can be cut or lowered, but I look at companies where I guess it could happen to anybody. I don't want to sound, selfish, but the companies that I own, I'm not worried about them cutting a dividend because I've done my homework, just like you have. So, well, mine is GeoCorp. That's the one. So I don't know. I look at stock market investing, and that makes me want to keep pumping my money in the market because I know my dividends are safe and they're going to come in every 3 months.
Yeah, I think there's a lot of guys on here. I'm surprised Hidden Freedom Investing's not floating around, because I know he's been kind of deleveraging out of real estate, because he just keeps finding himself in your situation where it's like no matter what, there's always something that you have to deal with. And I think you kind of have to have a passion behind it. And I've looked at real estate for years and years and years, and I can't find enough passion behind it to want to put the effort in, when there's so much better other passive income sources and like that can be presented through online businesses. Just there's a lot of other things outside of the stock market that I'm finding people are doing that are blowing my mind, especially when you look at like producing apps today, especially if you're looking at like the back end of Shopify or GoDaddy. Like they all have apps now people are creating that are producing monthly income. So whether you're doing it through like engineering, whether you're doing like people's websites, there's just so many levels there. Once they're set up, they're fairly passive. I mean, and you can do them anywhere, right? So I don't know. I don't know how much. It depends on how much you're into it. Because if you're into stock market investing, I mean, there's nothing wrong, I think, with even going 100% into the stock market. But maybe you should try and dever down some website stuff and see if you can find like. Did you do anything online right now except for
No, I that's like too techy for me. I don't do any of that. So all my reading and all that, I just know the real estate and I know the market, and I don't want to jump into. Yeah, I'm going to stay with those two investments. But,
Yeah. No,
mhm.
for sure. You should definitely stick to where you know. But I think depending on what stage you're at in investing, it's a lot easier for people to do stock market, obviously, just because it's so cheap in the first place, and it
Mhm.
really helps. I think the stock market's the best place to start, just because it's where what the lessons you can take from the stock market, you can take to real estate. Same with anything you're going to learn from real estate. You can take the same fundamentals and tools
Mhm.
that you've learned to the individual companies. So I mean, it's I think people just need to be a little bit more liquid, and they kind of just got to open their brain up and see how it can apply to different aspects of their life. Because now that
Mhm.
I've learned what I've learned about the stock market, like I feel like I can apply it to I apply it to my own business. I know where I'm failing. I know what funnels I can build, and it's just so easy to adapt. So I mean, it's kind of nice that once you educate yourself to that point, to try and find higher income sources. Because what so your rate of return was probably pretty decent in the stock market. You said
Yeah,
for
I
all of
think I was
2019,
like
right?
29% something this year.
Yeah,
So
which is crazy. So that you probably have the same dilemma where you're looking at these rate of returns and you're like, why? I need to find a better way of doing real estate, or I need to find a better way of doing my job, because like
mhm.
I hate when my portfolio outperforms my income, because then it makes me feel like I should just be focused on managing this. Because like you
Yeah.
said, if you can make 30% even on 100 grand, that's like a full-time income at a McDonald's. Like that's someone showing up to work every day while you're just sitting here. So I mean, am
Yeah.
I better off just
Mhm.
managing that? But it
Yeah, and
gets.
that's like us. That's like totally passive. Like I could sit in my underwear on my couch all day, and I still did over 30,000 a year doing nothing. So I know 2019 is kind of like that was like a miraculous year that we did. You're never going to find those gains like year to year. But
No.
like going back to the real estate versus the stock market thing, I mean the rent on my building, which is 1,800 a month, that's like set in stone for my lease, which is 12 months. I mean, that's all you can make on that building. So, but you can wake up in the market and a company you're heavy in could post earnings and it's like, okay, I just made enough money to pay my mortgage for, 4 or 5 months, depending on your position.
Yeah.
And I don't know, maybe I just like the market, man. I love the feeling of waking up and 6:30 here in California time, like hearing the bell and seeing numbers going. And I don't know. I've watched Wolf of Wall Street way too many times. I just love the market.
Yeah, him and Grant Cardone don't get along at all. I those two, the feud those guys had this
Okay,
year.
so we can get into that topic. I'm a firm believer in Grant Cardone. I really like that guy. I know apartment complexes are the way to like extreme wealth, but that dude will post up on his stories like, "Oh, worried about you're going to lose all your money in the market? Come get in real estate." And it's like Grant Cardone Capital. What is the difference from that and like a REIT index?
Yeah.
You're still in the real estate field. So I don't like how he bashes on the market as much as he does. Obviously, he can talk crap because he's done it, but that guy makes me laugh sometimes.
Yeah, I know Matt has investments with him, and it's fun because it's nice seeing Matt track it. I couldn't get involved. I debated it just because I'd have over the border tax. It's just a bad way of dealing with REITs. I'd rather do it through a tax advantaged account, which I wouldn't be able to do with his fund.
Mhm.
But he just playing that bash in the markets. But he's talking about he's really talking about the Wolf of Wall Street kind of people. That's kind of, I think, his vision on the market is scammers. He keeps forgetting about like, in my eyes, it's just buying individual businesses. There's no difference whether you're buying real estate, whether you're buying businesses. I mean, if you're buying McDonald's, you're buying real estate, like most businesses, brick and mortar, or if you're looking for the online tech world, there's way more. I think there's just way more tools and easier advantages than real estate personally.
Yeah, and I guess I kind of understand that, because most people just have their money out of brokerage and they're just, hey, did I make money this month? I don't know what's in it. Just so.
Can I ask you though, if you were to go back, because I feel really bad, because at this stage in the game, especially for someone like yourself or somebody in my position where it's fun to just throw these gains out, a lot of people aren't experiencing that. And I just wondered if you have any advice for somebody that's getting into the market, if you were to give yourself advice like you're 5 years ago, what would you have done if you could do it again today? Just to help somebody out that might not be experiencing these kind of capital gains, because I know there are people out there holding really risky companies that aren't doing so well.
Or people go after crazy dividend yields and they think like, oh man, we'll just do this. I'm more of a common sense kind of guy. So if I were to tell myself 5 years ago, what companies are going to be around in the future and where's innovation going? And a lot of people told me, because I got tech heavy. That's the first thing I knew, because tech is moving the world. And I bought companies that I thought will be around in the future. I didn't care what their earnings were. I didn't care I just said, what's the safest way of doing it without kind of being in like an index fund? So I said, well, I know Apple, every single person in the world's got an iPhone in their pocket and earpods in their ears, and they use iTunes and Apple Wallet. And then I looked at companies like Waste Management. Doesn't matter what's going on in the world, somebody's got to take your garbage out. So I bought Waste Management. After those couple companies, I got into like reading books heavily, and I said, okay, I'm gonna knock out 48 books a year. I got to be doing a book a week.
Oh, wow.
And then I started learning about valuations and companies and, getting on YouTube, watching guys like you break things down. And then I looked at Facebook and I said, I was holding Netflix for a long time. I bought in at 130. I held it for a few years. And I was like, Nick, this company's operating off negative cash flow. They're not profitable. You got competition coming from every angle. You got Disney Plus coming. I said, how much higher can Netflix get? So like I said, I read books, I learned, and then I said, oh my God, Facebook, $52 billion in cash, no debt. They're buying companies up. Everybody's on Instagram. Didn't Facebook buy that company studying brainwaves? I mean, they do 1/3 the advertising revenue Google's doing for that. And I said, dude, Facebook is a no bullshit. I got to buy this company. So then I started looking at other businesses, and I only hold, I think, 8 stocks in my portfolio. So
yeah,
a lot of people out there will feed you any kind of info they can tell you to either make money, buy my course, do this. I see that everywhere on the internet now. And it's like, dude, just do what you know is common sense and you will do fine in life. What are the sectors that are... Go ahead.
Sorry. Matt Money's going to join in a sec here. I'm going to throw him in so he can continue adding to this conversation as well. But I think just to overhang everything that you were just talking about, I think if you're a younger person or you're newer to the market, listen to what Nick is saying here, because he actually understands the reasoning behind each decision he's making, which is what most investors, the new guys getting into like Robinhood, they don't really understand exactly why they're buying or selling these. They're just listening to people. And then when the markets go bad, your logic's not going to be backing you up like Nick's is here, because Nick really is getting to the nitty gritty. I like that. So we're going to join Matt in here and you can continue off. So you were talking about a certain sector there, Nick?
Yeah, I kind of like talking about, just common sense. Like, what are the sectors that are moving the world right now? So you look at like autonomous vehicles. You look at 5G, you look at web services and AI. I mean, just look at what is every kid buying and every parent buying for ordering pizza. They're buying Domino's or they're going to McDonald's for food. Look at what everybody's got in their hand. They got iPhones, and Amazon Web Services for the cloud and just AI and Tesla. And I think Uber is a good play right now. I could talk an hour about valuations on Uber, but just like common sense, look at what's moving the world and get into it and you'll be fine. I promise. So don't think you have to know these crazy mathematical, how to calculate ratio. just buy what you think is smart and just
Yeah.
start there.
Great advice, man. I'm going to catch Matt up here because we've been talking about so much over the last hour and a half, Matt. We're talking about the down market here. Nick was just catching up on some advice that you would give to somebody that's new to getting into the stock market. But what's going on, Matt? What can you add to the conversation?
Not much. Just got off a plane a couple hours ago. I was just catching up with a buddy, smoking some cigars, and talking about life and business and everything, man. Everything. So Nice. Been listening to you guys talking a little bit about Cardone Capital for the past 5-10 minutes or so. And I figured I'd try to weasel my way in like I always do.
Yeah.
Nice. Yeah, Matt's got some.
Yeah.
Sorry, go ahead, Nick.
Matt, can I pick your brain with that? Because I looked at Cardone Capital, and he's always talking about, accredited investor. How much money do you need to start with to get into Cardone Capital? Is there a limit, or is it just, hey, Grant, here's $75, my lunch money for the week? I mean, how does that work?
So it used to. So I've been following it now for a little bit, ever since he kind of kicked it off, and it used to be accredited, right? I think everyone knows that. And then he recently started doing. I think now he has 2 funds. There was Cardone Equity 5, which is the one I'm in, and then there's Cardone Equity 8 or 9. I'm not exactly too sure. And all you need, originally it was supposed to be $10,000 buy-in, non-accredited. So all you needed was to make sure that it wasn't more than 10% of your net worth. But originally it was $10,000 buy-in. He lowered it to $5,000 buy-in for the non-accredited stuff. And yeah, so I mean, you don't necessarily need to be accredited anymore, but it used to be before, I guess, middle of last year. So I guess it was like April, May-ish of last year. It used to be accredited. So obviously I'm not accredited. So that's why I was able to get in as well. But monthly cash flow at the moment, so it's supposed to be about 6%. I'm actually averaging about 4.5%. So curious how it actually goes up next year, if at all. But I basically got my money in, I believe, May, and I got my first distribution in July. So I got $275 this year or something like that, off of a $15,000 investment. So.
Okay. Sorry to interrupt here, guys. I want you to keep this conversation going. I'm just going to grab another drink because my throat's done. I'm just going to clear myself out here real quick, and I'll be right back because this is a great conversation. Just bear with me, guys. I didn't plan it
sure.
long.
Yeah. Now, do you get a physical check every month, or does he just wire it to an account?
You can get a check. I personally get it wired to my checking account. Okay. So the positives and negatives are, one, you can spend that money immediately every single month. Negatives are, I like to compound my money. So I like to have it go directly into an investment account. So that being said, it adds another step, right? So it goes into my checking account, which then I immediately put back into my brokerage account. So the problem is, like you were mentioning earlier, you can't like just put $75 in like your typical lunch money, which is advantageous of real estate investment trusts. You're able to put in, say, $50, $100, $1,000. This sort of investment, one, is a lot more illiquid, so I can't touch that money until he either sells it or I guess it gets repossessed or however any sort of positive or negative way you'd want to spin it.
But he owns, I guess, so many properties. I mean, I don't know. Okay, so would you continue to mail him money and keep investing, or are you just going to stay where you're at right now and see how it goes?
For now, so I look at every single property. So there was 2 properties that I initially invested in. There was one in Sugar Land, Texas, which is right outside of Houston, which is like 30 minutes from where I'm at right now. I've been working outside of Houston for about 6 or 7 years now, and so I'm familiar with the area, that suburb specifically, and so I was comfortable investing in that property. And then there was another one in, I forget what beach, like outside of Miami. I like that area as well, so I was like, yes, I want to be involved in these 2 properties for sure.
Okay, so you get to select what property you want your money to go to. It's not just like this big fund of apartment buildings and you just get a return?
Yes and no. So for instance, there was these two properties that I invested in. I was like, oh, these are the two properties I'm 100% investing in. And by the time I invested, I realized that he had closed on two other properties in this fund as well. So what ended up happening is they closed Cardone Equity, what they call Cardone Equity 5. And it consists of these 4 apartment complexes. And at the moment, what they're trying to do is they now have Cardone Equity 8 and 9 or something like that. So there's another one that he's doing for non-accredited investors. He did Cardone Equity 6, which Cardone Equity 6 was specifically it was for accredited investors only for an apartment building in Austin, which if I was able to, I would have definitely invested that. That was a phenomenal A-class property. And then, not to say that the property in Sugar Land and the property in Miami aren't good as well. I just really like Austin, and I like the potential of Austin in the future. But then there's one that he's looking at right now in Panama City Beach, which I didn't really like. And then there's one that I think it might be part of Cardone Equity 5, or sorry, Cardone Equity 8 or Cardone Equity 9, whatever the non-accredited one is, that he's looking at in like Virginia, and I'm not 100% into that one as well. But yeah, you're right. So you're specifically investing in particular buildings.
Okay, that's cool.
So in that respect, you get a little bit more specific with your investment rather than say investing in a real estate investment trust and they kind of, buy, sell on your behalf. You don't really ever get that money. So in the case of Cardone Equity 5, if you were to sell one of these buildings, I would get partially, if not wholly, my money back. So in the case let's say, invested the $15,000, and that's spread across these 4 properties. I'm not exactly sure how much is in each, but of that $15,000, let's just say you have $3,700 or $3,750 in each of the properties, which I think if you divide that by 15,000 by 4 is 37. I don't remember, but if we were to sell one of those properties for, let's say, 100% return, I might get a check for $7,500, but I would still probably have the other 3 properties working for me, sending me cash flow every single month. I would anticipate that I could either, if he has another non-accredited fund, or if by that point, hopefully getting to the point where I'm close to being accredited, I could reinvest that money or take it and invest it in something else. But it's also slightly different. And this is what I'm really curious about is now that we're getting towards tax time, and I made that, let's say, $275 last year from distributions. He talks about that they're tax advantaged and that you get part of the depreciation, which everyone knows that part of the benefit of real estate is depreciation. And you don't get that in a real estate investment trust. So I'm really curious when it comes to tax time and I get my K-1 form, if I actually am able to write off a portion of that income due to the depreciation from those properties. So I'm really curious about that aspect of things, and I really want to keep people posted about that.
Now, you can also get the depreciation aspect off an LLP too, can't you? Or am I wrong about that? Because isn't something like Cedar Fair where they've kind of passed the depreciation and all the other stuff on to you? Or am I quoting that wrong?
Yeah, no, we don't call them LLPs. We call them MLPs, Master Limited Partnerships, or we call them
sorry,
something else as well. But I know what you meant. I'm not 100% versed on tax law. Things.
Because I know these things act a little bit differently, the LPs, but I don't know. Just figured I'd interject, but continue on.
One of the things with real estate investment trusts that I like and dislike is, at least for a U.S. investor, for me, I have about 20% of my portfolio in real estate, some of which is that Cardone stuff, and then the remainder is in real estate investment trusts. The problem with that is I try to keep it in tax advantaged accounts, because what ends up happening is real estate investment trusts, as everyone knows, generally pay higher yields. But the fact that because they pay higher yields, the reason why they're paying the higher yields is because they're tax sheltered investment vehicles.
Yeah, they have to pay, what is it, like 80% of profits or something in dividends?
100%. So that means you and I, if we're, let's say, in the 40% tax bracket, or in the case where some folks live in California, they're going to have to also pay probably close to 50%, depending on their sort of tax bracket of that income that comes from a real estate investment trust. So if they're getting a 5% yield, they're automatically knocked down to, say, a 2.5% yield based off the tax bracket that they're in, unless they're investing in a tax advantage account like a Roth IRA or a 401k or something along those lines.
Or a SIP plan or whatever they're on now.
Yeah, so I don't think a lot of people look at that. So when, like, let's say for me, let's just say I make $400,000 a year, which I don't, and I wish I did, but that would put me in, let's say, the 35% tax bracket. That would mean that it's almost more advantageous for me to invest in, let's say, 3M that has a 4% yield. I don't remember exactly off the top of my head what it is, rather than, let's say, a Stag Industrial or a WP Carey that yields 5%, because if it's outside of a tax advantage account, because by the time I get the 35% tax off of that 5% yield, I'm looking at the mid threes, sort of a percentage yield, whereas 3M or something like that, I'd probably be in the high threes in that respect, just based off the fact that the amount of taxes that I end up having to pay outside of a tax advantaged account. Sorry, we're getting into taxes, which I'm sure a lot of people, their eyes are glossing over.
Yeah, taxes is something that I need to become more efficient in, but I'm like, I got a CPA to do that, help me out, and taxes are this for me. So all I know is in California here, we get robbed blind. So you're paying for the weather out here. That's about it at this point.
Yeah, Canada's a little different here now that I've learned how to use these tax advantaged accounts, for sure. But yeah, I don't know. I've learned so much about tax, and the government here is so good because we can just log into the Canadian Revenue Agency, and they give you everything. They tell you RSP limits, your tax-free savings accounts limits, all your past tax payments, and you can just call them. It's like my new favorite thing to do is call the Canadian Revenue Agency, man, because they have all the answers. I literally would call accountants and be like, I just want to know this, and they're like, oh, well, you have to pay us, like you're gonna have to make us your accounts and blah blah blah. And I'm like, it's just a few questions though, and they're like, oh, we'll pay an advisory fee. Then I just picked up the phone and called the CRA, and they talked to me for like 20 minutes about all my questions. I should make a video on that, actually. Do you guys ever call? Because down in the States, you're dealing with what's the? No, it's not the SEC. What's your guys' tax guys?
IRS.
Oh, the IRS. Sorry,
yeah.
Blanking out. Yeah. So I mean, that'd be a fun combo to actually have, Matt. Maybe we should try and pop on a live stream and call the CRA, and then call and we'll get two sides of the conversation going, and see what we can actually learn directly from the government.
Good luck with the IRS.
Yeah.
I got a tax question for you guys, if you don't know. So your contributions towards a charity, how much of that can you write off?
Towards what? Sorry?
Say that again.
So if I donate, let's say, tax time's coming up and I'm trying to save them as much as I can, and I want to put $50,000 to St. Jude's Research, medical, how much of that can I write off on my taxes?
I don't know, but I think the way that it works is it would be, let's say you make $400,000 a year, that would put you at the top tax bracket. I think that would save you 12.3% on, well, let's just make it $1 million to make it easier, because California, I think, is, if you make over $500,000 a year, you're in the top tax bracket for state. You would save the 12.3% of that $50,000 just based off the fact that you're in the $1 million tax bracket, or the 12.3% state income tax bracket. So you'd save 12.3% off of that, and then you would probably save the 35% federal income tax as well. So you're probably close to 50%. So it's almost like, yes, you donated $50,000, but you're actually only donating $25,000 because you're saving so much on taxes, if that makes sense.
It's a question for a CPA, I know, because instead of, every time I write, I do my taxes, I hand the government all this cash because I do decent earned income. It's like, why don't I give that to like a ASPCA, or, I'd rather donate than give it to the government.
Yeah.
So that's something I need to look up.
Yeah.
I'm just yeah, sorry that a lot of that was over my head personally, but because I'm still trying to fully grasp the question that you had there, and you got to bear with me too, because
Yeah.
I'm still
Just you
surprised.
here,
Sorry.
I know in the States you can write off. So the whole name of the game is to get as many write-offs as possible. And if on top of all my things I write off every year, if I could do a large donation at the end of the year to get even more credit, so I don't have to pay these outrageous taxes that I pay,
Yeah.
I would rather do that than just writing a check from the government every quarter for, you know, 30, 40,000 bucks.
So I think, yeah, no, I think like Matt was saying, it when it comes to, you're trying to get into a certain tax bracket, right? So what I typically try and do is just utilize specifically the tax advantage account, especially if you don't have real estate or something like that, to just, you don't have to donate, because that's what I thought too, was I need more expenses. But if those expenses aren't going to be generating income, I'd rather try and put it towards something like a business or some kind of large capital allocation that drops your income to nothing. Then you're paying no tax, but you're still collecting a cash flow and you have some value to asset. But what you're trying to do is get yourself in a lower tax bracket, so then you don't pay nearly as much. So if you're making, say, $100,000 a year, well, here in Canada, your tax bracket is probably going to be somewhere closer to that, 40 or 50%. So what you can do is try and dump half of that into like your as much as you can into your tax advantaged accounts. Bring yourself down to maybe, like, if you have 30K you can contribute, that'll bring you down to like the 60, 70K mark. And then if you're running a business, you're writing your gas off, you have all these little things that you're doing on the side that could bring you down to that 50K mark. And then before you know it, you're only paying like 20% tax. That's probably, like I said, I'm still trying to understand exactly what you guys were saying there, but I'm hoping that gave some highlights to the Canadian side of it. But
yeah, I'm with you. Like on my Excel sheet for all my write-offs, I have like, you can write off a quarter of like your home for your office, and then your gas, and then my city of whatever bill, my utilities, anything for my rental, the yard maintenance, any of that. So I just, as many write-offs as I can get, and if I can add a donation on top of that to bring my taxes down, I don't know what Matt pays in taxes here in the States, but I know I'm sick of paying what I pay. So
yeah, that's a good question for Matt. How much, because you are utilizing your 401k, correct?
Yeah, but I utilize the Roth 401k. So I pay all my taxes now, and I also do the Roth IRA. But I've also thought about doing a 50-50 as well, because at this point, I don't know if I'll ever be in the tax bracket, the 30 or 40% tax bracket, like I'm getting close to at the moment. So in retirement, or when I actually utilize this money. So at this point, it'd almost be advantageous for me to take at least half of the money that I'm putting in my 401k and put it into a traditional. So I'm able to, say, write off like 3.5 or whatever I contribute of my salary, so that I can, let's say, contribute, for easiness, 3,500, but it's really only costing me, let's say, 25, or 3,500. It's really only costing me 2,500 because of the tax benefits, if that makes sense. At the end of the year, I'd be able to get back, let's say, 30% of that 3,500 that I'm putting in, because I'm in the 30% tax bracket, let's say. So I've thought about that, but I generally just do Roth because I'm young and I can afford the taxes at the moment.
Yeah. Now, I was talking a little bit earlier about the RSP, and I'm curious to what your guys' take would be on, say, the Roth or the 401k in comparison. Because with the RRSP, what I'm doing, I was talking a little bit earlier on the stream about, was basically, because that's a long-term retirement account and most of us want to retire long before 65, what I'm going to end up doing is withdrawing the capital gains out of my RRSP, but no more than 5,000 a year, because I'm probably not going to be using it to buy property. But where most people get confused, because here in Canada I get a lot of arguments with people about this registered account, because they keep thinking there's huge tax premiums. But the fact is there's only a 10% withholding tax, and then it just counts towards your regular income, which any regular account would have anyways. But the difference is I'm saving, like I was saying earlier, between like $5,000-8,000 in taxes. That's like my Tesla position that's going to be up 20 or whatever percent. So even if I'm pulling out profits, who cares if you pay the 10% penalty? And it's a good way of utilizing the account, I think, in the short term, which I'm talking 5 to 10 years, because it's what it's probably going to take to pull out the money and actually utilize it, intelligently, without paying massive withholding taxes. But what is there any advantages you can utilize similar in the 401k, or to any extent?
I'll let Nick see if he has any, but I know a couple that I was thinking about. Love to get people's opinions as well in the group. So
yeah, so my 401k, I used to work a corporate job at FedEx in management, and I utilized my 401k and I maxed that out and I got a match. And then I kind of dug into it because Vanguard is who hosted it, and it was like fee after fee after fee, and it's in these boring index funds that were only underperforming or matching the market. So I quit that job and I pulled that 401k out, and now it's in. I rolled it over in my TD Ameritrade account as a 401k, and I select what that money's in now. It's basically like my individual brokerage account. I bought Apple stock and put all that money in Apple. So that's what I do with my 401k now, and I don't really add to it. I just put all my money in my cash account because I want to be able to use it when I need to. And as far as like a Roth IRA, I have one at Wells Fargo, but I don't really contribute to it because I had it for a few years and I was only making pennies with it. And I called their corporate office and I was like, what's the reason for this? Like, why do I need a Roth IRA if I'm not making any money with it? And she goes, it's basically like a savings account for people that can't save money. And I'm like, well, this is BS. I mean, the dividend on Wells Fargo stock alone is paying more money than what you guys are giving me in interest. So the Roth IRA, I don't do. I know some people yell at me for that. And the 401k, it's just all in Apple right now doing its thing. So that's my 2 cents. I don't have much to say on it.
So what penalties do you experience if you withdraw early?
You're going to get hit. I don't know the percentage. Matt probably does, but I know you're getting hit with a penalty on early whatever the word I'm looking for. That's really the main fee I know. Don't touch your 401k because you're going to get hit. So.
I'd love to hear what Matt has to add to that as well.
Yeah, you probably.
So exactly what Nick was saying is I have an employer 401k as well, so I have a match up to 7%, which is phenomenal. Can't complain with that at all. So my thought is at least for what I was thinking in the past. Obviously, my 401k is in a similar situation. You don't get all the flexibility as you would want with a, let's say, IRA or individual brokerage account. And also, just from where I'm at, I'm 28. I'm, inching up on that $400,000 mark. And for me, it's almost like at this point, it's not about saving for retirement. It's about, retirement is way before 65, in my opinion, most likely. And so what I was thinking is exactly what Nick kind of did, which is roll over the 401k into its traditional and Roth counterparts, because obviously if I were to roll everything over in, let's say, a Roth, I would have to pay penalties and taxes on the capital gains, because some of it, at least what your employer contributes in anyone's 401k, is always going to be pre-tax because they use that to lower their cost basis and their taxes every single year. So keep in mind, even if which I generally do all my contributions to a Roth 401k, which means I pay the taxes, the exact match is happening on a pre-tax basis for my employer contributions. Now, what I was thinking is if I were to take my 401k, roll it over to an IRA, if you take an IRA, you're able to withdraw your contributions without any penalties. So what I was thinking personally is probably every single year, potentially roll over my IRA because I want to get that 7% match because it's free money. It's a free 7% or whatever my salary is, and that would then accumulate, in an IRA forever. And what I can do is take all my contributions out and invest that as I see fit, whether that's in an individual brokerage account or whether that's in real estate or what have you. The reason being is because while there is a tax advantage to having that money in there forever, like Nick mentioned, there's limits to what you can invest in. And for me, what I potentially might want to get involved in is something like real estate or online businesses, and you can't invest in those things within a 401k. So it's a catch-22. Yes, there's tax advantages, but tax advantages and penalties are leaving it so that you're leaving it in there until you're 59 and a half.
Yeah.
If you're retiring before 59 and a half and you need that money now, it kind of doesn't really help you at all, right? I mean, you'll end up having to come up with a fund or an investment account that gets you from, let's say, 40 to 59 and a half, and kind of have like a gap fund to get you to that retirement. So it's like, I kind of have this thought in my head where I have this, let's say 33% of all my money in this 401k, but if I were to roll it over into an IRA right now, I could almost increase my dividend income or my passive income by 33%. So it's like, yeah, I'm at like, let's say $12,000 or so now. If I were to be able to move that, I'd automatically be able to get it to like 15, 16,000. So an additional couple $100 a month.
Nice.
So it's like, you know what I mean? It's like, it kind of puts you in a circle.
I think at your game, Matt, like you're, especially, I don't know how much income you're creating, Nick, either, but I think once you get into that range where you can bring in such a large amount of capital to avoid the taxes, I think the best thing you could possibly do is either get into some kind of a business or some kind of real estate where you can make those large purchases. Because, man, considering you could probably put a down payment on almost one piece of real estate a year with what Matt's probably making. Depending on where you're buying, obviously, or trying to pull off like the Graham Stephan or, sorry guys, I'm kind of sick here still, but yeah, I think you guys are in good positions because especially considering Nick's already in real estate, that's the big dilemma that I constantly have, right? Is it's fun buying stocks, but if your income gets too high, stocks are going to start eating into, especially if you've maxed out those accounts, you're really going to start eating into the tax game, right? And like you said, it comes down to the point, like if you got nowhere to put it, you might as well donate it because like it just becomes annoying when you're shoveling it all to the government. So I mean,
yeah, and with the whole real estate thing, like depreciation is like the biggest. That's like the winner right there. Anytime you can write depreciation off. And then, I don't know, I like it because you can leverage a lot of money in real estate, but dude, the stock market, man, dividends, like I love dividends. I almost love them more than rental income. So especially when you're on a drip system and you're just accumulating more shares and it's just compounding, like real estate real estate in general, there's really a ceiling to what that building is going to be worth and then what your rental income is per month. Where the stock market, you could wake up and Apple could post the most killer quarter in the world and you're up, like I told you earlier. I mean, I think there's so much money to be made faster in the market than real estate, but it's nice to have both because real estate's a good anchor when you're losing hand over fist and you want to be jumping out of buildings with every other hedge fund guy.
I still think you got to run the numbers though, because to an extent, just because most people get rich in real estate, right? Just because you have the leverage that you don't have in the markets either, which is another aspect of looking into, like you said, at least diversifying to some extent. But just looking at the capital write-offs versus the stock market, man, because I'm getting to that point now where I've maxed my accounts and I'm really starting to look at every other option I have because even at my income level, like I could still end up paying, $10,000 in taxes, 10 or 15K, and not having to pay that is ridiculous considering what it's going to produce into the future. But I like having that access to it. To an extent, but I mean, just to be in control of it, I feel like for as long as I can manage it before I have to give it to the government, I'm better off. But the fact that you can, like I said, when you get into the level where you're making 6 figures a year in income, I don't know exactly the tax bracket levels in the States, but in Canada, it gets so ridiculous at that level. Like you're better off trying to find a way to funnel it into as much real estate as possible or funnel it into something that's going to cash flow and give you equity backing it. Because like I said, I just don't know the account advantages and how much you can add to the portfolios of the 401k or a Roth account. Whereas in Canada here, everyone's so excited about them, but a lot of them haven't got to that level yet where all of a sudden they're maxed out and now they're thinking about, oh, well, what happens if I get sued? Or how can I protect myself by putting it into, say, a company and making it, just incorporating and then diversifying away? Because after you get to the point where you start building up, it's just how much can I save not paying taxes? Because like I said, I can only contribute $6,000 at this point to a tax advantaged account. So as my income increases, it's going to become a problem in the future, right? That I have nowhere to put money without the government wanting to take a huge chunk of it.
Yeah, definitely the name of the game is to get away from earned income and start building other forms of revenue because there's so much savings and tax wise. But so I know mentors in my office. I'm in the real estate field. And I know people that are paying quarterly taxes on what I have to pay a year. And That's insane. I can't even imagine. One, you're obviously making a ton of money to be paying that much in taxes, but like, I can't even justify. These people must be sick writing these checks to the government just because the government doesn't know how to use our money. I mean, the roads are crap. I could go on and on and on about politics and whatnot, but yeah, getting away from earned income is definitely the key to success in financial, freedom. So
what's your end goal, Mr. Nick? Are you trying to do multifamily, or are you going to stick with single family?
Good question.
I know apartment complexes is the way to go, but I deal with investors now, and they're like, Nick, a tenant in an apartment complex is 1,000 times worse than a tenant in a single family residence. Because once you get into multifamily, dealing with those people is not fun. So I have that on one cloud, and then the other cloud, because I make decent earned income, I don't have to pull from my stock account. I want to just shovel money and live off dividends in the end. So it's kind of like I really have multiple avenues of things I can do in retirement. So I'm kind of just playing it by year and seeing what things I fall into as I go.
So what I hear is you're utilizing real estate to gather wealth relatively quickly, get your leverage up, and then what you're doing is siphoning that income from your real estate into a very, very passive investment, which is in dividend-paying stocks. Whereas real estate's slightly more active and active.
Yes, I definitely get phone calls from my property manager saying, hey, your tenant says this is out, or you need to do this. And it's like, damn, dude, like I just got a phone call 2 weeks ago about a maintenance request. Like, this is ridiculous.
Yeah.
So, but I look at it as it's a good anchor savings account because I'm building equity in it. And then I look at it down the road, I can do a 1031 on it, and I could go put that into maybe a triplex or a fourplex in Arizona or Texas. Because I know in real estate in California, it's really out of control out here. I can vouch for it. So it's kind of nice. Maybe I'll play the game of Monopoly and I'll get 2 or 3 here in California, and then I'll do a 1031 on all of them, and I'll go buy my own 20plex, in Florida. I'll create my own Cardone Capital fund. So there's a lot of avenues out there to make it in life, and I'm just kind of playing a game of chess right now, looking at my moves. So that's
very nice.
No, that's really good insight. I struggle with it as well because I have zero physical real estate, but obviously I have the real estate investment trust. I also have the Cardone Capital position. But the Cardone Capital position is nice because I get the cash flow every month, and I don't have to deal with tenants. And same thing with real estate investment trusts. But yeah, part of me is just like I really want that leverage, and I also want that tax benefits of investing in physical real estate as well. And am I missing out on that because I am in a higher tax bracket at the moment, where let's say that depreciation really would help out. Let's say $3,500 in depreciation off of a $100,000 house would be extremely beneficial for me in this day and age. I mean, $3,500 would give me, let's say, $1,000 or maybe even $1,500 at the end of the year in terms of tax benefits. So, yeah, it's definitely enticing, let's say, to get into physical real estate. But I do definitely acknowledge, at least for me, being someone that is currently an expat and potentially might be a lifelong expat with the business that I'm in, it's very difficult for me to invest in, say, physical real estate unless I have a great relationship with my property manager, or I have, let's say, a really good relationship with the person that I'm lending money to invest in physical real estate on my behalf. Mm-hmm. So
I got a flip question here for you too, on the other side of people that own real estate but are just getting into stocks. I know people that will leverage property, and I'm curious to what you guys think about leveraging off if you own most of your property into the stock market. Because I've met people now that mostly own their home, but instead of leveraging it into another property, they just leverage it in and collect dividends. But the leverage is so much cheaper because it's against real estate, right? So you can get your mortgage for what, 2 or 3%. So if you're collecting at say 6% on MO, like you're still collecting a decent yield, especially if you're dumping maybe 100 or 200,000 off a $500,000 mortgage, say. But what are your guys' thoughts on that? Have you ever seen anyone doing it on the flip end of it? I mean, it's not like the worst idea, I guess, if you're under diversified, because I mean, most people have most of their money in one asset, which is real estate. And then the
Mhm.
problem is that they don't get global diversification. Because here in Canada, like the worst thing you could have is all your money in CAD dollars over the last 5 years. And so, I mean, that was the huge depreciator on most people's assets that's under the radar. But yeah, what are your guys' thoughts on maybe flip leveraging there?
Matt, you want to go first?
I've known people in the past that have done it back in 2008, and they didn't turn out so great. But I don't know anyone at the moment that personally has done it.
Yeah, but to me, it's no different than, say, I know people that are doing it, but also the markets have been incredibly well, and I don't know what it would take to get a margin call today or what the extent would be. But at the same time, I know people that have been still having some decent luck with it, and it's just another interesting thought considering it's that debate because everyone's like, oh, you should never use leverage to buy stocks. But I mean, if you're helping other people invest or you're investing your parents' money, like you're going to run into that idea of like, this isn't my money I'm investing. So what's the difference? And same with buying, say, a business or leveraging it into another asset. It's just kind of that interesting thought that I was just debating on how much success people actually have out there with buying individual stocks with leverage. But yeah, I've heard more bad than good. So I don't personally do it, but I do know people out there that are doing it fairly successfully.
Yeah.
I have one client right now that did those home equity line of credit. They pulled their money out to go buy more buildings, and he wishes that it worked for him. And like you're saying, I know a couple people who do that, but to me, that's just another form of gambling. And if I have all this money in an asset, it's going to stay parked there for if I need to do it for something major in the long run, like buying multifamily, which I would do a 1031. But if I have money in something, it's staying there. I'm not touching it. I'm not gambling with it. Just let it do its thing. Save up enough money, then you go buy another building. I don't like doing that home equity line of credit.
Yeah.
Because you remember people did that in 2008. Like, oh, the market's great. I'm going to pull money out. I'm going to go buy boats and Harleys and all this crap, and look what happened. So I just stay where you are and build up enough money to buy your next asset. That's the way I look at it. So
yeah. It'd be neat to see some people's thoughts on that because it's just an interesting topic that I'm finding coming up lately. Because I always wonder if you just had a little bit more leverage in the market, but that's the greed game, right? Like, is it really worth taking on that risk? Because I mean, what was it? Financial Education went through a margin call once upon a time too, didn't he? And that's where he lost most of his money.
Jeremy also told everybody to buy GoPro and sell AMD and selling his Apple. I mean, I like Jeremy. He's a funny kid, but I take what that guy says with a grain of salt, just like Jim Cramer. So
yeah, that's everybody though, right? Like we all have our ups and downs. So I mean, not to just back them up either, but that's why I like when people show a lot though, man. Is having that topic because there's a few guys out there that don't like showing their positions like PPC, but I honestly find you just learn so much more from people when you get to see that and witness it. Because a lot of people won't talk about it, and it's very a blue moon event when we get to watch someone destroy their lives, hacking Robinhood mortgage accounts, or we get another big Apple shorter like the Wolf guy.
Oh, I remember that video. Yeah.
Yeah, so I mean, those are rare events that I really enjoy seeing, but most of the time people don't talk about their losses, man. So you never hear about it as often.
Yeah, I'm sitting on a couple 90% losses as we speak. So.
Oh, really? Wow.
Yeah.
We've all had some of those experiences though, man, but I like learning. It's just fun to see people go through it because it's when you either man up or you move on.
So I really enjoy it seems like he's always putting out videos on Tesla now. Like Tesla's the biggest stock that everybody's talking about, and I'm happy for all those people that stuck it out because I mean it's been a hell of a ride. So
do you own Tesla stock at all?
No. I love the product just like everybody does, but the company is just, I think it's extremely overvalued right now. To have a market cap bigger than Ford and GM and these other people put together, and there are only, there's 400,000 vehicles on the road or something. I mean, correct me if I'm wrong, but it just, and I am seeing a lot of Teslas on the road now, especially here in California. I don't know how it is in Texas, but it's just, I need like an Elon Musk index fund. I need the Boring Company. I need Tesla. I like Elon. And if something happens to Elon, what happens to Tesla stock? I mean, there's factors out there that could really hurt that share price. And to be at 430, and I mean, I don't know. That's my thing on Tesla. So we could talk about that for a while, but I stay away from Tesla, the business, but I really like the product. And I really like Elon.
Yeah. Yeah, see, I've been riding the roller coaster since my first shares. I bought my first 5 or 7 shares or something when it was at 320 or 330. Watched it drop all the way to 170. Wish I was buying it, but I was too heavily focused on MO and BTI at the time. But I told myself I was going to buy more toward the end of the year, and sure enough, I loaded the boat. But I do agree with you at the valuation point. But it's based off speculation, and if it's a spec play, I mean, you gotta kind of look at the future growth aspect of it. But it's also like you said too, like when you're looking at like Uber and where the future's going, I think you got to stop comparing it to companies like Ford and everything else, and just kind of look at if they can pull off what they're saying in the next year. I think you're going to see it go a lot higher, to be honest, just based off self-driving. Because if you run the numbers on the cars they currently have on the road and what might be capable, forget even if regulation allows it. If they can just prove that self-driving is capable, not only are you getting that massive potential to that market, that is all speculative again, mind you, but if they ever announce something like that, the stock could go 20 times higher. Just proving something like that could be a capability. But you're also getting global.
Sorry,
You're just getting a rock solid company on the.
Sorry, go ahead.
Yeah, sorry, I kind of cut off there when I said rock solid company. The only reason I'm saying it's a rock solid company is because they've proven something that other companies are having a hard time struggling with, which is getting China won over. The fact that they're proving numbers, the fact that they're building factories that have been unheard of at a mass rate, and you're getting exposure to one of the largest battery producers, which is where the world's headed if they continue to buy mines, if they go down that route anyways. I just feel like compared to any other car company, saying it's a car company might be a stretch at this point, considering the only thing you should be focusing on is the self-driving, is the battery aspect of it, and just the fact that their cars are 10 times more ahead. And if that future, if it's worth the valuation at this point is the real question, right? Because is the valuation of the fact that they're so ahead of the game right now worth what you're going to be paying for it? And to me, like I said, if you run the math on just getting even a quarter of the cars they have on the road into self-driving, I mean, those numbers work out pretty fast, right? And we're still not talking about the tractor trailer aspect of things, and if that works out, which would be cheaper than taking trains and transporting those kind of goods to an extent, because trains are still needed for certain chemicals and things of that nature.
I think,
that's just my opinion.
Yeah, which is very valid. I think the valuation in Tesla isn't so much in right now, it's in the cars, but I think when Elon starts getting satellites orbiting and that technology that relates to the cars and the energy saving, I think that's where Tesla's going to make their big money once they get out into space and whatnot, because that's really where
also speculative though, right? Like we got to remember that if it's all speculative here. We're not talking about base fundamentals or anything. It's just relying on a guy that's done the impossible in the past, not necessarily on time, but he has done the impossible. So I mean, you're kind of betting on the fact that those engineers are going to be able to continue the process. Because it's not just him either, right? Like he's just the face of the company, but the engineers that have backing Tesla and the board members are absolutely top-notch people to be doing what they're doing, considering like look at Ford and GM or Porsche, like their cars in comparison are just almost a joke, not to most people obviously, but when you look at the metrics and the numbers, it just doesn't add up, and you're just like, how can a company that's doing what they're doing, how can none of these other companies compete? Like what's the deal, right? They release their patents, like Tesla's an open book. They're like, here's what we've done, learn from it, and they can't even get to the same standard with the knowledge that they provide. So it's kind of staggering to see that disconnect if we're comparing it to an auto company. But I try not to compare it to Ford or GM and look at it as more of a tech battery, like it's just tech battery, kind of a funny tech battery, natural energy kind of exposure. It's a few other like parts of the sectors, right? You're getting some decent exposure at this point. I'm not going to go on any farther because I could gloat about Tesla for days, as I'm sure
I got some stuff to rebuttal your debate.
Oh no, for sure, and I'd love to hear it, man. Like it's a good conversation to have, because I could be wrong, but I still think it's a gamble. Don't get me wrong. I think it's a spec play, and you're relying on a lot of things to go right to get it to even where its current market valuation is. But if you're going to bet on somebody, man, bet on the guy that's done the impossible.
Yeah, that's true. And like what you're saying, Elon said, hey, here's what I'm doing. This isn't for money. This is just the way the world is moving. But we haven't even got into competition yet. And you got companies like Volkswagen coming on, just mass producing. I look at Teslas in California, and it's almost like a fad thing. Like, you're cool if you own a Tesla. And if Tesla could get their Model 3 down, what are they down to 36,000 on their base model, their cheaper one?
US, a lot more expensive in Canadian dollars.
Okay, yeah. I think if Elon can lower that, which he is, they're finding new resources, cheaper things. But I just see these other competitors coming on the scene with money, and Volkswagen is the #1 auto manufacturer in the world. They produce so many cars. So when you get these cheaper competitor cars, yeah, you might not get the luxury side of Tesla, but I mean, if Tesla is trying to respond to the EV market with coming out with these robot turtle trucks and these crazy cool things, I like what they're doing, but I see some bumpy roads coming up with competition coming. So we will see what goes on.
Yeah, but the thing that I look most forward to, that I think that a lot of people are buying it for too, man, is just it's the head of the game. It would be like. Well, I think we're beyond the days of when we were looking at like MySpace and Facebook. Like, I think Tesla's gotten to the point now where they've got their foothold in the ground, and that they're going to be in this game for the long term, which is it's going to be nice to see as it grows over time. But yeah, you're right. These other guys want to come in at a cheaper. They're going to try and do it cheaper, but I don't think they're going to be able to do it as on a scale that's going to be as successful as Tesla's been able to do it.
I don't know, man. I know it's a totally different sector, but look at the streaming wars. Yeah, Netflix has been around. They got it, but here comes everybody trying to take their bite out, and
I just it kind of reminds me. I feel like you can come back to me later if I'm wrong on this, and feel free to slaughter me later for this comment. But it really reminds me of when the CEO of Microsoft was making fun of the iPhone, saying it was just a fad, and that is what happened with these car companies when Ford and GM CEOs were just making fun and hammering Tesla. But now all of a sudden they're like, oh shit. Like, if we don't change, we're screwed here. So I mean, I feel like that we're at that stage now where it's like, okay, these guys have proven it, and I don't think competition can come in, but it's not there yet, and they're so far behind. So I mean, by the time they catch up, Tesla's got their full fleet of vehicles, where these companies' fleet of vehicles aren't coming out for another 3 years. Tesla's going to have all their cars out. They're going to have the Roadster out by 2023, the transport trucks coming out. Then they're going to have the whole range of cars. Meanwhile, Volkswagen, Honda, all of them are 3 years out, 2023, 2024, before any major production even begins, when you can start buying these vehicles, right? So and then we're still talking about infrastructure. What's this going to do for gas stations and charging? And Tesla's done that. So I mean, like, it's not like we're going 5 years back when Tesla could have been in big trouble because they didn't have, they were running into problems with raising capital. But I think those days are far set behind us at this point, now that he can prove we can do revenue. I mean, you got people like Kevin O'Leary jumping on board. If you can get Kevin O'Leary on board, I mean, not that I really like the guy that much, and I don't really believe in his investments, but I mean, for a stronghold dividend investor to jump into Tesla, I mean, that says a lot at this point. And that was recent, right? So I mean,
yeah. But I mean, for individual investors that jump in at, what was it today? It closed at 419.
Oh no, macro for sure. I think it's a little overvalued in the macro right now. Totally agree.
I mean, I would have a small position in it because you're right. That's the future with autonomous driving. And if I'm at home and my car can go out and make me money in Uber and then return back to me in the morning, and the satellite play and linking everything together, dude, Tesla's going to be a $1 trillion company eventually. So, I mean,
yeah,
it's just going to be interesting to see, as far as competition goes, cars on the road, because I know Tesla has more money with satellites and all that. So it'll be interesting.
Yeah, I'm more excited for Mars, to be honest. That's another good reason I want to see Tesla succeed. I'm like, if it even helps them get closer to Mars, I mean, I get in arguments with people about that because it always comes down to, oh, why don't we start putting the money into fixing this planet up, blah, blah, blah. But honestly, I think the space race has been put on hold for far too long. And I think it's the start of something absolutely incredible to see in our lifetime, let alone what our kids might be experiencing, because I feel like what we're doing is going to be prehistoric 50 years from now. So it's going to be fun to be a part of that, or say, look, oh, I was invested in these companies. People thought it was still kind of a joke. I hope there's you try and invest what you believe in, right? But I'd rather invest in Tesla than something like the MJ sector right now, to be honest. I feel like there's more good to be had in that direction. We've been having a lot of arguments before you guys popped on the MJ sector. I don't know if you guys look at that sector too often. I know a lot of people that I've talked to recently on the streams have been down on things like Aurora. just reading through. But jump in here, guys. Feel free. I'm still horribly dying here, trying to keep my throat together.
Nick, did you discuss what your goals for 2020 are yet?
No, I haven't. That's a good idea. That's a good topic. So I want to continue doing a book a week, 4 books a month. As far as like financial goals are, I would like to get my $105,000 portfolio into the 250 range. So as long as we have a decent market this year, that's what I'm looking at. It's either that or I get another property, because I was talking earlier. I'm sorry, I don't even know your name. Not Matt.
Kyle.
Kyle. Okay, Kyle. Got it. All right. I was telling Kyle earlier, depending on what the market does this year, we're so inflated, and I don't know if it's going to keep going up. Is it better to buy another property or to plug the market? But my dividend income, I also want to increase from doing $2,400 this year. I want to get it to at least $5,000 next year. So books, portfolio, or rental property, and then dividend income. So that's my goal.
What books? Me and my buddy were just smoking some cigars and chatting about books. So I'm curious what ones are on your mind.
There you go. It's funny. I read constantly, and all these books say the same thing written differently. So I've gotten more into biographies, but I guess it's better. I could tell you my top 5 favorite books, and that's Intelligent Investor by Benjamin Graham. One Up on Wall Street by Peter Lynch. That's a must read. A Random Walk Down Wall Street. I forget who does that one. And I read Shoe Dog by Phil Knight. That was a really cool book about the story of Nike. And the last one I would probably tell everybody to read, not financial wise, but I read Elon Musk's book, and it just blew my mind how that guy thinks. So those are kind of my 5 top big ones. And then now I just pick up any book I can wherever.
Yeah,
so
me and him were talking about, I was talking about the ones that I have read that I recommend. And one of them was the Think and Grow Rich by Napoleon Hill. I thought was really good.
Yeah.
And then there's more of like a management book that I've read, or at least partially read, but it's called 5 Levels of Leadership by John C. Maxwell, which I thought was really good.
Mm-hmm.
And then one of the books that I really want to get into, I personally look at a lot about management and business management. So one of the readers that I think has a very interesting perspective on consulting as well as business management is Simon Sinek. And he has a book called Leaders Eat Last, which he just came out with last year, and Start with Why, which is like what your purpose is, and purpose-led organizations like your Apples, your Googles, and stuff like that, and why they're so disruptive versus the companies that are strictly looking at profit and loss quarter after quarter. And why companies like Costco are doing so well versus like, let's say Kroger or something like that. It's because they really want to get their customers the best prices and make sure that they're happy. So even if in the short term, if they lose a little bit of money, in the long term, they'll be lifelong customers. So in the long term, they'll be able to gain money. So it's small things like that. And as somebody that looks at profit loss, in terms of dividends, coming into my personal account on a day-to-day basis, I'm a firm believer in those sorts of things with respect to like purpose-led organizations and being able to think beyond, let's say, cutting costs this quarter because it might impact company morale or it might impact company culture, which in the long term could absolutely destroy organizations. But anyway, really, those are some good books. I'm not sure if you have any other ones that you're picking out for next year, or you're going to choose them as they come.
Yeah, anything Napoleon Hill is like gold on paper. I'm a firm believer in him.
Okay.
But, a couple other ones is Principles by Ray Dalio. I think that's like the Bible of how the brain works and how you can set your day up to be successful. And then another one that is an absolute must read, I forget who writes it, but it's The Magic of Thinking Big. And basically it just goes into like your mindset is like literally 99% of your success rate. And the way you look at things and the way you think about things and turning a negative into a positive and, always the glass is half full thing. I think your mentality is like
Thinking Big.
Yeah, it's called actually here. It's on my bookshelf. Let me grab it.
Yeah, and then maybe I'll
Oh,
throw
let's
in
go.
some ideas. Yeah, I want to see the book first here.
Yeah, I need to get myself a nice bookcase like that. Mine's sad. I don't read
Mine
nearly.
would be on my phone. It'd be like an Audible. I always listen to Audible when I'm driving sometimes. If a book intrigues me that much.
When I finish writing my ebook, which I need to get started on because I said by 1Q, I want to make it Audible.
This is it.
The magic.
Okay, there you go.
Nice.
This book is like the fundamentals of like mindset, and I got a book. So another good. Oh God, this is a totally different topic. Bob Iger's new book is a really good book too.
I love Bob Iger. I love him.
Yeah, how he took Disney and then went after Pixar and talked to Steve Jobs and then went after that. That's a phenomenal book too.
That would be a great book for me to read.
I gotta add some stuff to my list. Holy jeez.
Bob Iger, I love listening to the Disney conference calls because I think that he is the most articulate yet transparent CEO that I've ever heard talk. And I've heard some real con artists. And I mean that in an endearing term. I know not all CEOs are con artists, but I've heard some really like CEOs where I'm
James
like,
Bond looking dude.
Yeah, dude, like look at him. Like he's just like when you think of Disney, you just think of him. Like
cheerful, happy Bob Iger. So right here is another Yeah, my man Grant Cardone. I read every one of his books, and the 10X Rule is the best. So I do that one, and then the one I'm currently reading is it's kind of an older one. It's Wall Street on Sale. So it's all about how to value invest and figure out what's worth it, and always look at PEs, and then it goes into deep about valuation for value investing.
Yeah.
So books are my thing. I'm a bookworm. So
I need to read a lot more. Personally,
yeah, I'm kind of on the back end, but I'm much more of a video person. But I have a long list of people and advice. But I think the best advice that I got was probably that Warren Buffett quote where he was just saying that the best course he ever took was a public speaking course. And I think it's important to. I don't know. I couldn't recommend any direct books, but people should probably take some courses on neurolinguistic programming. It's a fascinating pseudoscience that they basically use to help program AI when they're doing facial recognition software. Most cartoons take advantage of it too. Actually, I could throw in a few tips on it because one of the best-selling books in dating was called The Game by Neil Strauss, I believe, and he used most of the techniques from NLP, which is typically used to try and get to understand people better on their level. Because I think, like you guys are saying, it's about building a good network as well of people. But the only way you can attract them and learn this kind of stuff is by getting your own thoughts to a level where you can kind of play in that realm and be thinking bigger on the aspect of things. But yeah, I love NLP when it comes to marketing, and it really helps understand like human psychology. Like I'm sure you've heard like the eyes are the gateway to the soul. They mainly say that because when you access certain facilities in your brain, they directly correlate to your eye movements. I'm sure you've heard when people lie, they look in a certain direction. Most of the visual part of our mind lives up in this atmosphere. So usually when we're thinking about things, we're looking up or trying to create images. And when we think to ourselves, it's the best one because you're looking down to the right, which is internal dialogue. And then emotions are usually you're looking down to the left. You can see this a lot when a boyfriend and girlfriend fight. She'll be crying and she'll be going back and forth and she's kind of having this argument in her head. But honestly, if you want to play a little bit of a game, because there's a lot of magic related stuff to my field anyways, but show somebody like 10 cards, tell them to think of one of the cards and then show them each card individually. And when they see their card, it stimulates their brain and their pupil will naturally dilate. It's also a good way to tell if a girl or a guy's into you. Comes back to the dating aspect of things. But the reason we learn a lot of this is just like one aspect of it. There's a whole nother realm of like encoring emotional states. Like I've been in the sales game for a while, but the best stuff I ever learned started coming from social and public speaking. Because when you get into the realm of public speaking, sooner or later, you're probably going to want to learn about NLP, how to talk to people, how to talk to people on their level. If they're a creative person, like they live in the visual world, or they're auditory based, where you might want to talk with more sound based. And there's kinesthetic people that are more emotional based. So I always find myself kind of using some of these techniques to get to know people better, and it's helped me out a lot, being more personable. And I think it has a lot to do with investing on that end of it. That's kind of like the nerdy back end of my life. But I think people should find a way to access those books because if you can learn how people work, it becomes a lot easier to start getting more comfortable with the stock market. and especially when you have to go out and talk to people as well in public with your own business. You got to be able to do public speaking to some extent. I mean, watch Shark Tank. It's a good enough example, right?
Yeah, you got to be a people person and be able to talk to anybody.
Yeah.
But I would definitely contribute reading to most of my success and mentality now. And it was like, back in the day, it was like, okay, I could watch Netflix and binge watch something, or I could pick a book up and actually learn something. It's all entertainment versus value. And what I get out of books is just so much more mind opening, and you learn new stuff, and new stuff makes you revenue. So
can I tell you, do you run into the dilemma though of not working? Because it's a big problem that I have right now where like I can't, like I literally set up to do a video today, man, and I closed my eyes for a second and 4 hours went by because I've just been dying all morning, and I'm like, I gotta get something out, right? So I hop on the live stream, but I find myself in this constant itch of, if I watch TV for too long, if I do, like, I always find if I'm out, it's so hard to digress and not come back and be like, I have to do this. Like the other night I was working on the website for like hours just adding stuff, and I find like if I'm not adding or contributing to like one of my things I want to build, I'm falling behind for some reason and I can't relax. It's a big problem I find. I don't know if you have that dilemma, because it's the same thing with reading the books, right? Like, why waste your time watching Netflix if I could be learning? Like, and then it becomes the constant.
Yeah, and most of my reading is like, I think I watched something on Buffett, and he watches CNBC on mute and he reads. And during the morning time, I kind of do that now just so I can see the ticker on the bottom of the screen. But it's mainly like nighttime. If I'm just like BSing on my couch and we're watching TV, I'm like, I'm going to go read a book somewhere. So I kind of look at it like that. But
so you obviously, I know, because you guys work regular jobs, like you have probably regular stable hours too, right? To an extent, so you kind of probably have some regulation. I know when Matt comes home, clearly the most relaxing thing he wants to do is talk about stocks. So I find that kind of fascinating, because that's a far and few in between that are willing to pull that off. But
I'm a little different. I'm a realtor, so I kind of do my own schedule. And some days on a Tuesday, I could either go golf, or if I don't have clients or I'm showing property, it's my thing. And it's a little different. My problem with now is I bought myself a Christmas gift, and I got myself one of those new 75-inch LED or QLED TVs. And I'm like, oh man, I got Disney Plus now. I got to be watching something. I want to enjoy my gift. But I'm like, okay, Nick, I've done that a couple of days now. I got to pick a book up. So
I keep forgetting you have kids too, right? Which that really helps you wind down, because I found it when I'm especially around like cousins and their kids, like it really helps you digress so much more. But when you're just sitting here on your own, because I only ever see my girlfriend like once or twice a week, I'll probably go see her tomorrow, but it's just the fact that like I get here by myself and I'm just like angst. I'm like, all right, what's the next thing here? It's like 12-15 at night, and I'm like, as soon as I'm done this stream, do I have enough time to do this and this stuff before I got to go out tomorrow? It's just I need to start winding down a little bit, I think, and to kind of enjoying it like you are to an extent. You got to find those
to keep you sane.
Those outlets, or you start getting a little nutty. Because Matt's crushing it too, man. Matt's been on fire lately. Jeez, he's been doing the whole YouTube thing, the stock market thing, the full-time job, crushing it with the income thing. Like Matt's got
trying, man.
But Matt, you were just on vacation too, right? Like you were just out in Turks and Caicos, were you not? You got some
I've been taking advantage of the fact that the company's been paying for my housing to take a lot of that money that I was spending to get a little bit outside of my comfort zone. So part of my goals that I started and set for myself in 2019, I have a long list of stuff. Some of which being personal development goals, working on my personality, my acceptance of other people. Not that I have a real big problem with it, but also looking and making sure that I view everything from other people's perspectives as well before jumping to conclusions, because I often jump to conclusions. So a bunch of different small things. One of them also being travel, making sure that I take advantage of the fact that I'm in a different country now, living most of the time, and going to 10 countries before the end of 2019. And now I've also have a long-term goal of hitting 50 countries by the time I'm 50 years old, and going to 15 countries, or maybe it was 20 countries. Let me double. I had to go digging a little bit, but it's either 15 or 20 countries by the end of 2021. So just trying to make sure that I'm not just focusing on the investment side of things, but also making sure that I am driving myself to be a better individual, better person, better uncle, better brother, better son, all those sorts of things. And I think when you focus on those sorts of things, looking at those sort of aspects of things, the other things kind of fill in and make me more marketable as an individual, which, you know, whether that's personality-wise, work-wise, will all come into play. And whether that means I end up going into business for myself, you know, it'll play out into being able to get better business partners or being able to get a different job within the organization, and which would then end up being in higher income, which all, you know, it all is like a chicken and egg sort of thing, but it all stems back to just making sure that I'm able
I think
to
that's a really humble way of looking at it. Actually, that's a really good point to add in there. It kind of reminds me of like the 3 pillars of life, right? Is trying to find that balance between money, family, and health. Because if one of those things isn't in line, usually the rest of them don't follow suit very well. Which is why I always feel bad when you run into kids and stuff that have like broken families. It's always a little. I always feel like they have a peg behind. It's usually a bit of a challenge because I look at just how my parents, just for them being together and supporting and stuff, has really changed the outlook on my life. So I always kind of feel bad for people that don't have the advantage. But I think that's a really humbled approach to look at it, Matt, is just trying to find a way to be, you know, more truthful. I honestly think the day my life changed was when I decided to stop lying about everything. Like, I'm just going to be 100% open book and see what happens. And as soon as you do that, it's crazy. The people that are willing to talk to you, like the advantages you can find from the government, like the tax deferral stuff. Like, I always used to be so paranoid and you hide everything, but you realize the day you open up, you got to be careful, obviously. I mean, nobody wants to get robbed here. So to an extent, you got to be within reason and find the trustworthy people, but you got to kind of have a moral compass set, right? But at the same time, the day you open up and stop lying to yourself and other people and just be truthful with what your position is and what you want to do, find it becomes life changing. It's like that Jim Carrey movie. What is it? Yes Man. You just start saying yes to opportunities and start being more open, and, you know, go into your own comfort zone and try and learn.
Absolutely.
But that's probably a really beautiful note to finish on, because you guys, I don't know what your night plans are looking like here, but I'm surprised I've been going for this long.
I was going to say my wife is ready for me to get off this and go get in bed. So
my girlfriend was texting me. She's like, "You look like you're dying." And yeah. Anyways, that's a great note to finish on. I can't believe we've had roughly between 15 and 20 something people that have stuck around for this whole stream to an extent. So I mean, thanks to everyone that's joined and put up with my cold here. I'm really thankful for Nick here for jumping on. But stay cool, guys.
Yeah, thanks for having me again.
Yeah, man. Thanks for staying on long enough for me to be here.
Yeah, and big shout out to Hidden Freedom for joining, Golden Boy, Gen X always floating around, Ryan K. So stay cool, guys, and we'll catch you a bit later. And I'll catch you in the back end here on the end here, Matt.
Yeah.
Peace out, guys.
Cool. See ya.